Sethi. 7th floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Majcen from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show. Let's go.
We are live from the Bermuda Digital Finance Forum. We're on island time, Rob.
We are. We're here on island, as they say, and it is a pleasure. The absolute journey that it was to get set up this morning was incredible. I think we had about 24 people getting us set up. We got the backdrop, we got the chairs. Shout out to everyone. Shout out to Near, and shout out to Bermuda for hosting the Digital Finance Forum, along with Salt and Penrose for helping put this on. I'm excited. We've got a full slate today and tomorrow. Andy, what are you looking forward to?
Man, I mean, we came from Consensus Miami. It was very, very hectic. It was a lot of kind of the more native digital asset investor crowd and folks. This feels much more like a allocator conference, right? It feels much more like an investor first, allocator first, policy first, implementation first kind of environment, right? And so thinking about how this technology is going to be used in practice, right? I mean, just today, we already saw news from the Bermuda government and Stellar bringing some of their payments and stablecoin processes on-chain. Bermuda's coming out and saying, we want to be the first on-chain economy for a government. They said that at the World Economic Forum in January 2026. Feels like this conference is the beginning of making that possible.
And I think they're generally seen as one of the most innovative jurisdictions out there, which is why they're going and embracing AI. They're embracing blockchain rails. And all of a sudden, you see what is typically a financial forum turn into a digital finance forum. I think that's a sign of the times. We've got our first guest.
Yes, we do. A lovely, lovely friend, Ian, here. Ian, welcome to the show.
Thank you for having me.
Thank you for being here.
Most welcome.
How's the conference treating you?
Conference is excellent. You mentioned our host, Penrose, have done a fantastic job here on the island's second conference, and also partnered with Salt, another great events company. It's a pleasure to be on the island for the first time.
And you're part of the crypto regulatory complex in the UK. I'm curious, maybe you could tell us a little bit more. We hear a lot about Clarity. In fact, I think we covered it almost every day, if not. And so it got to the point where it's either going to happen or it's not. Things are starting to progress a little bit more. How do you see the crypto regulation progressing in the UK? Similarities, differences, generally with the United States?
Well, I can imagine when you're at Consensus, you did have lots of conversations about Clarity. Doesn't surprise me. It's been a long time coming for the US to start actually putting forward policy and getting legislation in place that then the regulatory perimeter comes through. In the UK, we've been consulting on this with our government and our regulatory stakeholders for the last 5 years. At Crypto UK, we've been around for almost a decade, and we've been instrumental in making sure our government has a positive policy position for crypto. We saw that in 2022, and we're a little bit further ahead in having a regulatory framework. We already have certain requirements, and our stablecoin regulations will land this year, along with a host of other requirements for certain activities performed by certain market participants. And we at Crypto UK obviously look to the US as the largest market in the world, with lots of innovation and development within the blockchain sector. So we are now part of the Digital Chamber of Commerce, which is one of the UK's and the US's largest industry associations, to make sure that we work together, because we're all tackling the same problems. How to regulate this new industry in a positive, proactive way that allows for innovation.
Yeah, incredible. I'd love to understand a little bit more about some of the progress you've made in the UK so far. We had this villainous era with Gary Gensler at the head of the SEC. The last administration was very anti-crypto and made it very clear that they were. Now things are starting to, we're righting some of our wrongs and then we're moving forward as a result. While we were, fighting tooth and nail internally, what was the UK able to do to progress the industry forward?
Well, we saw two things. Firstly, on the direct investment side, all jurisdictions want to bring onshore economic benefit, and we're in Bermuda, and Bermuda has been very progressive in doing that, bringing capital here to set up within the blockchain industry. We see that in other smaller jurisdictions, but one must remember the bigger countries have a lot greater responsibility and requirement, so it takes a lot longer to get policy and regulation through. And in the UK, we've been working, as I said, for the last 5 years to get regulatory clarity. We at Crypto UK, we want a perimeter, a regulatory perimeter that allows for organizations to operate, function, build new products and services, at the same time be mindful about such things as consumer protection.
Yeah.
Be mindful about, in the event of bankruptcy, is there enough capital on the side to pay off users of a platform if indeed such events occur? There's lots of similarity with financial services. UK, as you know, has a pretty big capital markets and financial services and a fintech sector. And so we use that infrastructure to help develop and build out what is already a pretty well advanced regulatory framework in the UK. And naturally, the UK has in the past been part of Europe. And we know Europe does have MiCA and some of the parts of markets in crypto assets, the wide regulation that already sits within that jurisdiction is coming into the UK. And we'll see if we can have some repository around that and share some ideas and learn some of the good things that were and maybe leave some of the bad things aside.
Yeah. We were at the DC Blockchain Summit just a few weeks ago. And the idea there was that there was a lot of innovation happening both in the SEC as well as the CFTC and the White House. All of these agencies were starting to come together. Over in the UK, how do you view these agencies? Are they collaborative? How can we ultimately build these, collaborative regimes across the entire world, not just within the US, so that everyone is on the same page? Have there been any sort of contributions, or generally when you're looking at clarity and genius, how much input, can someone in the UK give on something like this, and vice versa? Have you seen US counterparts provide some sort of input or contributions into the UK regulations?
Yeah, it's a great question. I was also at that summit in DC, and it was great to see both heads of the big financial agencies in the US come together and say we're going to work together, because as you said rightfully, it's been a very different environment where there hasn't been any collaboration. And this industry, and this is one of the value propositions of blockchain, is collaborative in nature. It's open source. We work together. We have organizations and foundations that collaborate to develop good products and services for users. Now, the UK has created a partnership with the US, transatlantic partnership, to share ideas and perhaps develop some form of reciprocity around different sets of regulation in crypto. This has existed in financial services for a long time. There's been a good relationship there. And perhaps the UK, now not in Europe, can move closer and work with the US. And that's part of why Crypto UK and Digital Chamber came together to develop some of these standards and lean into this UK-US corridor, if you like. The UK is a slightly different regulatory environment. We're much smaller than the US. We only really have one regulator. We don't have to deal with a commodities regulator. We don't have to deal with a securities regulator. We don't have to deal with a bank regulator or the Office of Comptroller for the currency. So it's slightly easier for us to move the needle with our regulator, which is called the Financial Conduct Authority, which is a very big organization and does great work globally, is well respected. And then lift up another level, and they have the intergovernmental agencies such as IOSCO, Bank of International Settlements, Financial Stability Board. These folks set overarching principles and guidelines that competent authorities such as the UK, European countries, and the US can take and use them. So those organizations try and create global standards and collaboration, but we're a long way off any of that. But I hope with the work we can do ourselves at Crypto UK, with Chamber, talking to DC, talking to Westminster in London, we can get some form of cohesion together and have standards that allow for businesses that are global in nature to be able to build out a roadmap that isn't confusing for different jurisdictions.
Yeah. One of the exciting things about being here is that Bermuda is taking this kind of step as a jurisdiction itself, similar to the UK, being like, look, we want to embrace this technology. We want to embrace, blockchain rails, agentic rails. And I mean, as I was saying, when we kicked it off, this country wants to be the first fully on-chain economy. I'm curious from a just let's say a much larger country, what does that actually like mean or look like? Like, is there a real path to becoming a fully on-chain economy from one of the biggest countries in the world? How far-fetched is that?
I think it's achievable, but it's a lot more, how can I say, difficult, or requires a lot more effort from all the different stakeholders. Now, Bermuda has been very progressive. You mentioned the announcement at WEF by the President, David Bird, and also the announcement made today regarding onboarding merchants, local merchants, how to receive consideration for purchasing goods and services with stablecoins. I mean, that's a really good initiative. I would love to knock on the door of the Prime Minister, number 10, Downing Street. He's got a few issues at the moment. I don't know if you've been following the news, so he probably wouldn't open the door. But be able to have that access and go and say, here's a use case, here's a value proposition. Let's do this because this is the future. Technology doesn't care about governments, doesn't care about incumbents, doesn't care about boundaries. It just will permeate into our everyday lives because it does things faster, cheaper, better, right? That we've seen that before with other technologies. That is just a fact. So it's not a case of when, it's not a case of if, it's just when. And so with the larger economies, the more nimble, smaller jurisdictions can move faster, right?
Yeah.
It's like working in a startup versus working for Goldman Sachs.
Yeah.
Those big oil tankers can't turn around as fast as perhaps the more nimble speedboat, which is smaller jurisdiction.
From your perspective, is the perception of countries like Bermuda, which I think is still a British colony, if I'm not mistaken, do you see them almost as a testing ground? They're more nimble, agile, that can go and do things that maybe it would take a longer amount of time for the UK or the US to do, and so we can sort of learn quite a bit from these jurisdictions, see what works, see what doesn't work, and then take that back and teach ourselves and ultimately implement on a longer timeline.
Yeah, absolutely. And Bermuda is an overseas territory and has the use of the UK common law and the language and many of our cultural exports from the UK, but is a sovereign country and can write its own rules, and it does. And so what I think we'll see from the bigger jurisdictions, whether it be European countries ourselves or North America, they will look at these as like testing grounds, sandboxes, if you will. Is it working? What's working well? What's working bad? But remember, in the bigger countries, you have big stakeholders. For example, you talk about Clarity and the Genius Act.
Yeah.
The banks. The banks might not like this direction of travel.
They certainly don't.
Because it hurts their business model. We see that in the UK. And you can look at Bermuda, its main industry is insurance. And insurance, actually, there doesn't seem to be, in my experience, that much of an overlap. We're not swimming in each other's lanes, blockchain and crypto services. In fact, the two can come together and support each other with particular use cases. So that's a nice little model. Whereas in the bigger jurisdictions, you have the incumbents that have a lot of money, have a lot of resource, have a lot of lobbying power over government that push back. And that's net bad for everyone.
Yeah.
But that is a fact of life.
And Ian, what you're kind of talking about here is culture, right? Or at least a way of thinking, conflicting industries, conflicting incentives. Another kind of cultural point that I'm curious about, more kind of broad scope here, is specifically about the transition in the UK. So you're from the UK. You've seen a lot. You've seen a lot change. And I have a couple mates that have been from there, living there, have recently moved back to the States or vice versa. And I can't help but hear and consistently hear about this kind of bucket of crabs mentality that they say that their peers in the early careers have, where in the past it was much more of a go and get the job done at all means capitalistic, kind of trying to help each other win. But from what I hear from my peers now, they're saying that it's a lot more of a crabs in a bucket mentality. How do you respond to that? I'm not trying to poke the bear here, but like, how has the career culture changed in the UK?
Yeah, I'm not wanting to make this a political discussion for your listeners.
I asked, right? So
and there's the divide of right and left, and we are a democracy, and we have seen over time swings perhaps further from the capitalist view, which sits on the right of the political spectrum, more into the left and sort of socialism view. And the UK has sort of, for the last few decades, threaded a pretty good line for balancing being one part socialist and supporting the less haves, but also having that capitalist view, which generally is net good for the economy and growth. But at the moment, I agree with your peers, that balance is moved away from, perhaps if you believe in free markets and you believe in capitalism as the best form of democracy, perhaps moved away from that. So I would hope over time we get back on course and we can grow our economy, because our growth numbers aren't great, but it remains to be seen. I will do my little bit to help steer us in the right direction in this industry.
And this has been a transition that's been happening all over the world. Yeah. The policies in general were, more globalist in nature. Even just 5 years ago, everyone was sort of helping one another, even if it was, capitalistic. Everyone was out for their self-interest. It feels like now, countries are sort of these crabs in a bucket. Mm-hmm. We're reshoring a lot of things here in the U.S. And it seems like there's a lot more of those policies that are taking place all over the world. And so I'm curious, when you see a lot more of, crypto companies and more of these digital finance companies maybe returning to the US, they're kind of dissolving this labs foundation dichotomy that was happening for so long. How do you react to friendlier regulation in the US, for example? Does it kind of accelerate or motivate the UK in general, and just as an example, but for other countries too, to say, hey, we have to go out, we have to make friendlier policies so that we can, recoup some of these companies and, they don't get swallowed up by whoever has the friendliest regulation at large. And so I guess in general here, with the Clarity Act coming, the US seemingly more friendly in regulation, how will the UK react to get some of those entrepreneurs, to the UK and make sure to foster, business in the UK and generally?
Yeah, I'll pick up three ways to answer this question. First data point is, after the UK announced it was going to be a crypto innovation hub, and that was Crypto UK getting that language into the government's manifesto, that really drove interest in the UK. And at that time, the US was perhaps a place where US startups weren't sure whether they should launch a product and service there, because they could be taken to court for violated securities fraud. You mentioned it yourself. Enforcement by not rulemaking, but by the SEC and others. Yeah. And so I would speak a lot to our Department of Trade, which is there to bring investment into the UK, for US businesses that wanted to know what was going on in the UK. I would take a call a week for a couple of years. Now, those calls aren't coming in. The opposite's happening. Ian, what's going on across the pond in the US? What's happening with these two pieces of primary legislation that they're going through? How do I set up in the US? How do I get onshore? And so we've seen a complete 360, and that's, in my personal view, net good for the overall industry. The US is the biggest market in the world, has great innovation, has loads of people that do really unique stuff and priority work in the crypto sector to grow the overall pie for the rest of the world. I see that as a positive. And the work we do, the little work we do at Crypto UK, is to support our members and the community in the UK, whichever stakeholder it may be, private, public sector, to understand those things that happen in the US so they can join in to the growth of this pie.
Yeah. Ian Taylor, I hope you have a great rest of your conference. Thanks for spending some time with us. COo Board Advisor, ht.digital, bringing crypto into the UK here in Bermuda. Thanks for your time. Thanks for being a part of it.
Thank you very much for having me.
Absolutely.
Guys, we're going to pass you to the panels downstairs. There's an awesome panel going on right now. There are three lovely gentlemen wearing suits. That is the state of the digital assets industry today. We're going to pass you there and get our next guest. Thanks to Ian. Let's give him some love, guys. We'll be right back.
And visible forever. And not just today. So your account will be doxed. Your behavior will be doxed. The alpha you create from investment opportunities will get discovered, and somebody will start copying that, mimicking that, or front-running you, or hedging against that. So we believe the solution is not private permission networks, where you are siloed, because you don't need blockchains for those. They exist today. They're banks. They sit behind centralized servers and firewalls. We believe the solution is bringing Web 3 closer to Web 2, getting to Web 2.5. And Midnight is a permissionless but private network. What do I mean by that? It means that partners like Monument Bank, who are looking for safe, secure, private networks, can come without our permission and build their private domain and their solutions for their clients. So the first stage, and I think Wasim was a bit humble, they're the fastest growing bank in the UK. Their technology is that advanced that they can onboard both individual and corporate clients within half an hour using AI, cloud computing, and other things. So they're not stuck with legacy banking. What they're about to do with Midnight is put their client assets, cash deposits, on a permissionless public network, but in a private way, approved by the Bank of England and the PRA, the regulators in the UK. And from that, as stage 2 evolves, as we bring tokenized assets into this private domain, is for them to make that available to their clients. So we talk about tokenization is about democratization, fractionalization. The real value is collateralization, the third Asian, because then you can bring in hedge fund assets, private equity assets, and you can actually look through to them. I used to work for a hedge fund. Trying to get leverage on a hedge fund unit is hard. Get leverage on the underlying portfolio is super easy. So if you can prove what the underlying asset is behind the stable coin, proof of asset, proof of collateral, proof of reserve, proof that you're trading with a certain investment guidelines, covenants, then imagine how much access that gives you to better leverage, better finance, better opportunities. So that's what Monument Bank are trying to do with their clients in a permission way, but that they control. We don't control, but in a permissions network. So it removes silos. It allows a network to occur, because relations don't happen bilaterally. This is involving a third-party digital asset custodian who are regulated in the relevant jurisdictions. It brings in tokenization platforms who now have a distribution channel, because tokenization does not have a supply problem or a technology problem. Where do you distribute it to? Once the retail crypto fanboys and curious have gone, where is the institutional audience coming from that want to adopt this? Where are the bigger clients coming from, or the mass affluent? So you need to create an opportunity where they can do it.
So what's the uptake beyond? I mean, your partnership is clearly flying at the moment at an early stage, albeit. But what's the uptake across the industry? Are you seeing others following this example, or is this something of an experiment still?
I think different institutions are experimenting with different blockchains. The benefit we've had since the Monument announcement is that other banks have come and spoken to the foundation. They are asking whether they build or they buy. Now, the nice thing about the Monument solution is it's not one and done. They have separated their technology service for themselves as a client, but also can offer it to third-party banks. So it's banking as a service or crypto as a service. So there are interests in that coming. I can't speak for what's happening on other chains, but I would.
Hugo, maybe you can speak to what else is happening.
I want to speak about what's happening
Yes.
perhaps on Ireland, because there are a couple of things that you said here, and actually I wanted to pick you up on a couple of things. So actually, one of the first stable coins was the Bermuda dollar. The Bermuda dollar was fully backed by US dollars held in custody for longer than a number of the innovations that you said there. And the other thing is, like, we're talking about a UK bank where there's fast growth and fast onboarding. Everybody's got to get there. So we have an onboarding journey that we think is as fast as that. 20 minutes for individuals, half an hour for the data upload for corporates on Ireland and elsewhere. Now, I really agreed with the point that you made a moment ago, talking about the privacy and security. It's like, what is the purpose of banks when payments can move straight through, when stable coins can are an alternative place to maybe store value? You get back to the fundamental principles, and safety and security is absolutely one of them. There are payments, there's yield generation, there's collateral, everything that you've just said. But a ledger is how a bank has worked for time immemorial. So integrating with the digital solutions that are there, absolutely essential. But every time you have to come back to, and I think it's a principle for everybody here, is what is the fundamental use case for a user, a business, an individual, and banking there is a big change coming. There are like rent-seeking behaviours that are under threat. There is a lot of change happening, but a highly regulated institution where the security of people's money is absolutely paramount, and that will stay.
I agree.
So Rob, with all these use cases flying around, is there any FOMO out there, and is there any risk around that? How important is compliance in this?
It's a good question. I would say, look, I've been in the space since 2017, banking the space since 2017.
So have I.
Nice job. And we've seen a lot of FOMO over different things that have come about, innovations that have come about. We're cautiously optimistic about the innovation that's coming about now. I think there are still some challenges. I heard you mention, third party. I heard you mention, network. At the end of the day, we're hearing the buzzword of network coming out from every corner. A network is a group of people who trust one another. At the end of the day, it's trust. If we can't trust the movement, at the end of
Alrighty, guys, we are back here at the Digital Finance Forum, day one in Bermuda. We're sitting next to Jeff Bandman, a former senior USC FTC official, as well as a 6-time Jeopardy champion. I used to watch that show. I was lucky to get about 2 questions right per show at the age of about 13 to 14. I'm not sure if there was ever a kids version, but I would have been winning in that version. Jeff, welcome to the show. Welcome to Bermuda. How's your trip been?
Great, guys. Thanks so much for having me. It's great to be here in Bermuda. Actually, the government here has been one of the leaders since 2018 in the digital asset space. This is only my 2nd trip to the island, and this is the first time I've experienced sunshine. It's been really beautiful, and this is a great event to be here for. A lot of really interesting people who are doers and builders. So that's been fantastic.
Definitely
incredible.
Well, you are currently leading the regulatory strategy for Kalshi, one of the world's largest prediction markets. You have an extensive background. Your claim to fame here is you got Kalshi regulated in 2019. I think is the exact year. Just walk us through a bit about your career. It's quite extensive. How'd you find yourself in the role at Kalshi? What were you doing previously, as I mentioned, and why now?
Sure. And I should clarify, I'm not leading Kalshi regulatory strategy today, but in the early years when we were battling the CFTC and wrangling them to try to get them regulated. And that process started. I started working with the founders in January of 2019, and so we'll talk about that journey a little bit. But it really is amazing. The vision that is being implemented right now is exactly the same vision that the founders talked about, 8 years ago. So it's pretty remarkable. In terms of my background and kind of what got me there, I'd say I was kind of a markets guy. I started my career as a lawyer, first a corporate lawyer, then a general counsel during kind of what I would say kind of an earlier wave of fintech, but before people had the term fintech. Worked on kind of some of the transition from voice to electronic trading, and saw how these new business models were really exciting to work on and to build, and at the same time were very threatening to incumbents. So we're seeing that play out. We're seeing that play out with Clarity and Genius and these models. So I worked on the legal side. Then I had the opportunity to switch to a business job. With my first business job was actually working at Cantor Fitzgerald. After the 9/11 tragedy, I'd been interviewing for a strategy job, and then after the events, they brought me in, and the person I'd been interviewing with, who fortunately survived, said, Jeff, you're a smart guy. Do you think you could figure out how to run a market data business? So I sort of had the hands-on experience of running a market data business. I made a lot of mistakes. It was a high-pressure environment. Howard Lutnick, who's now the Secretary of Commerce, is very demanding, and obviously it was a very intense thing, but an opportunity to learn. I'd say an early mistake I made was not focusing enough on revenues and thinking about intellectual property, and now I realized you needed to learn both. I spent a number of years in New York and London working on different types of market structure initiatives and in data trading and clearing and swaps and futures. And then in 2014, I got the opportunity to do public service as a regulator at the CFTC. And at the time, I have to say, nobody knew what the CFTC was in New York or in Washington. If I told people I worked at the CFTC, they'd be like, the FTC, this. And it was very, very difficult to explain, what
year was this?
So I started helping, first Chairman Tim Massid prepare for confirmation in 2013, and I went to work there in 2014. And my kind of what I expected to be working on, and Tim kind of rugged me a little bit, though, it worked out, the CFTC was having a lot of trouble making sense of data about the swaps market, and regulators get a lot of data, but how can they make sense of it? And then, of course, if something bad happens, the regulators get yelled at if they had the data, but they didn't do anything with it. So, it was originally I thought it was come to Washington for 3 months and help us straighten this out. And then maybe a few weeks before it became official, it's like, well, Jeff, it really needs to be for a year. And for many years, I was one of those people who thought, New York is the center of the universe. I can't be away for more than a few minutes because, who knows, I'll miss something important. But anyway, I went to Washington and worked on data and trading and clearing and international. And then the way I kind of got into these crypto and innovative markets, in 2014, a market called Predictit was trying to get a no action letter. The only thing that really had happened in that space, not a lot had happened. In the 90s, Iowa electronic market had gotten a no action letter, and Predictit came along and said, well, in the past 20 years, like the internet was invented, and we want to try to expand this a bit. So I worked on that. And then also, I didn't know a lot about Bitcoin or crypto in 2014, but as it turned out, I knew more than pretty much anybody else at the CFTC. So, after the chairman testified to Congress that we thought Bitcoin is a commodity and therefore of interest to the Commodity Futures Trading Commission, I started up a task force and a study group and started spending, more time looking at that. And my day job became oversight of market infrastructure, especially clearinghouses, which are a big part of that, clearinghouses like CME and ICE and London Clearinghouse, where I previously worked. It's an interesting experience in life when you get to regulate your former colleagues. I believe I did it fairly, and hopefully they would agree with that. But the blockchain and digital asset work was taking more and more of my time and getting more and more interesting. And also what would happen in 2015 and 2016, the SEC and the Treasury and the Bank of England and the FCA and regulators around the world would call up and they'd be like, Jeff, what are you seeing? And I'd be asking them what they were seeing. And we were all kind of just trying to figure it out together. It was more and more interesting. Chairman Chris Giancarlo, Crypto Dad, came in at his request. He asked me to take the work we were already doing, but to build it out more formally into an innovation hub. And it was one of the most exciting experiences of my life. Chris said, Jeff, I want you to build an innovation hub here at the CFTC, but I don't want to call it a sandbox. In a sandbox, people, it's just soft, nothing can happen. I want to call it a lab because people can get hurt in a lab. And you're old enough to remember Lab CFTC, which I was. That was a fintech initiative of the late 90s, early 2000s. It's like, we're going to call it Lab CFTC. I'm like, oh, that's a great name, sir. Like, great. Now your job is to tell me what's in it and what it's going to do.
Yeah.
So we launched Lab CFTC and got that off the ground. And then, a few months later, the CFTC started regulating crypto futures. Chris became Crypto Dad, and then later Hester Peirce became Crypto Mom. But a lot of the research that we had done, the CFTC was ready to regulate the product because we had spent 3 or 4 years studying it, so building up the knowledge before we put a regulatory framework, and we had done our homework.
Yeah. Well, you were long ahead of your time. Even in 2025 and 26, right? We've got a much more thoughtful approach to digital assets, and they've aligned with your CFTC opinion at the time, which was that Bitcoin is a commodity. There's more coins that are a commodity. These things generally aren't securities, and so your time at the CFTC sort of paved the way for a lot of the regulation that's happening now cross agency, and we're seeing a lot more collaboration amongst those agencies. I'm curious if you see any initial leadings. You mentioned that there was a sandbox that you were, a lab that you were in charge of creating. We're here in Bermuda. There's a lot of innovation that's happening. I'm curious on the regulatory front. Given your past experience, where do you see the most potential for innovation? What are some of the regulatory efforts that you think are most exciting nowadays, and how do you think we can ultimately bring those about?
Yeah. So, well, first of all, start with talking about Bermuda. Bermuda Monetary Authority is a wonderful regulator, world-class, respected, conscientious. I think regulators are responsible for balancing multiple missions. They obviously need to protect the investors or consumers in their jurisdiction. They need to be able to balance these missions. At the CFTC in the statute, it actually contains the words, and as part of the statutory mandate, responsible innovation. And, I feel that in that area, I've dedicated my career to promoting responsible innovation. And I think that the strongest regulators are the ones that strike their balance. They listen to the registrants, they get the feedback. They still have to be strict because they have to protect people, and there's a lot at stake. And so, Bermuda has prepared itself to do that. I think, regulators need to be adequately resourced and correctly resourced. Like, there's obviously the opportunity now for regulators to use supervisory technology. So the regulator of the future, has a lot of these tools at their disposal. Now, my experience with Kalshi was very, interesting, and I think it's a real reflection of this. So, in 2019, in January 2019, I first met the Kalshi founders, Tarek and Luana, and what I subsequently found out, they didn't tell me this at the time, was that they were in Y Combinator. They had developed this idea while they were at MIT. They have this background, these overachievers. Tarek was on the Lebanese ski team. Luana was a professional ballerina, and very, very strenuous. And then they were kind of math and data overachievers at MIT. So they developed this idea for this market, and they were beginning Y Combinator, and they realized they needed to be regulated. So they did their homework, and they compiled a list of 65 law firms, legal experts, regulatory experts, and all 65 of them said no. They turned them down. They said this is impossible. They can't do it. And then they found me. I think it was through some Brazilian connection to a law firm that I'd partnered with on something else. And so I met them, and I certainly never told them it would be easy. I said, this is going to be difficult. It's going to drive you absolutely crazy. It's going to be a long road. And, for people who are, kind of fast overachievers, hard workers, especially with the kind of a West Coast tech mentality from Y Combinator, kind of West Coast tech time and regulator time are very, very different. But their vision from day one was to do it the right way and the regulated way. And so what we, engaged in a program of educating the regulator, what I call creative compliance, which is to figure out, how to do this, a set of activities, which is very clearly, in the CFTC's remit. That right now there's a lot of, litigation and dispute and discussion about, what what the law provides. But it's a very clear legal doctrine. If we have time, we can do a deeper dive or another time for your, for your viewers. But, it was incredible. So in the first meeting, I explained to them, CFTC vocabulary, what is an exchange in CFTC speak? It's a DCM, or designated contract market. And if you have an exchange, it needs to clear through this thing called a clearinghouse, which is a DCO. And I kind of explained the regulatory stack, and they're like, "Oh, how can we learn more about this?" And these, non-lawyers, pre-ChatGPT, I said, "Okay, here's the statute and here's the regulations." So that was on a Thursday. On Monday, they send me a 20-page memo that they have written themselves, going through every single one of what are called the core principles, saying, okay, this is how we're going to comply with this. This is how we think we'll comply with this. We don't think we know what this means, but this is what we think it means, and literally, so I was clearly dealing with, extraordinary people. And frankly, the more I tried to discourage them, the more determined they they became. But it wasn't an easy journey. We spent probably 9 or 10 months just interacting and getting feedback from the regulator and the staff before we even filed the application. That took a lot of patience. That also took a lot of trust. They had a lot of trust in me, and I said, look, be patient. The first few meetings, I'm the one who's going to go in there. I have the relationships. If I misunderstood something, they can blame me and not you. So by the time we put you in front of the regulators, you've kind of internalized, and they've been incredible about absorbing and learning from everywhere. I mean, they're incredible learners. Yeah.
How do you think about the current structure of the regulatory side of prediction markets? Given your experience, I think the biggest issue right now is the insider trading conversation. What is your current viewpoint on the regulatory practices of prediction markets?
Yeah. So I think you have a situation where you have one set of regulated entities, and Kalshi has very, very high market share in the regulated market, and then you have these kind of offshore unregulated markets. Obviously, Polymarket is the best known. It's like I think I'll give you kind of an analogy that some people can relate to. It's like you have kind of the big brother who sort of or older sibling who works hard and gets good grades and goes to school and does things, and then you have kind of the younger sibling who's like a bit of a rascal and knocks over the toys and somehow when they do something wrong, it somehow reflects on the older brother because you're the one who is supposed to know better. So I think a lot of what's happening, and I hear this all over the world because I talk to regulators and investors and other exchanges in Asia and the Middle East and around the world, and they say what's going on with this insider trading. And the reason there's so much of what's called this insider trading is that on a DeFi market, and I'm a believer in DeFi markets for certain things, but in a DeFi market, you don't know who the market participants are, whereas in a U.S. regulated market, Kalshi knows who every single user of the market is. So if if one of you goes on the market, and then you suddenly you buy a lot of some contract, you sell a lot of some contract, that is the kind of behavior that shows up in, very standard market surveillance software. So, this surveillance program detects patterns and anomalies. On a DeFi exchange, you don't know who those participants are. And so, what happens is all of these events occur kind of on the offshore unregulated exchange, and then the reputational damage comes back and damages the regulated exchange. And it's like having a black sheep in your family, but the black sheep in your family, and some people are like, oh, this is great, they're the renegade, they're the future. But ultimately, I think for people to use markets, especially new, they want to trust that they're participating in a fair market. And something that Kalshi has found through its research is a lot of the users of these markets actually they trust them more than they trust sort of financial stock or option markets. And not to be negative about those, but they feel like in those other markets, they don't have a chance competing against the big names. Whereas in these prediction markets, there's so many topics, and it's an area where if you have knowledge or you do research, you actually can get an edge. But your edge isn't that there's just this, kind of boys club or incumbents club that you have no way of getting access to. You actually can get a reward for the hard work. So, I think it's important to crack down on it, but, it becomes a political talking point also.
And in a more nuanced fashion, right, the issue is around having certain groups having access to understandings of what a potential outcome of a given event could be in an asymmetric fashion compared to others, right? If you work at the MLB stadium where there's going to be a game that day, and you know that because you talk to the manager who manages the team's health, you know that Alex Rodriguez isn't playing. So you know that maybe you're going to take the under on the hits for a certain team, et cetera, et cetera.
Or you were there for the national anthem rehearsal, so you know it's going to come in under 3 minutes.
Yeah,
sure. And so and so in markets, generally, all participants are typically trying to seek asymmetric information to be able to provide them upside to create a thesis, whether it's you're early to something or you've given privileged information or whatever it is. But in these nuanced kind of like event outcome based markets, it's quite different than just like, I'm going to buy the stock and try to, hold it and then sell it in the future. It's quite of a different, typically it's a binary outcome, and it's quite a bit quicker. How do you think about the nuanced answer to whether a manager of a team, somebody who was at the rehearsal, how do you draw the line here?
Yeah, I think it's a very good question. I think that is a subtle question, and in fact, kind of the term in insider trading and the concept of insider trading does have a slightly different meaning in the futures and commodity derivatives market. So for example, if you're a farmer and you know that the crops are great this year, or the crops are not good this year, or that a very important granary or a shipping conduit for grain somewhere in the Midwest is going to be shut down, or there's that's considered okay. You just have information about the market, and then that sends a very valuable price signal to the market. So that kind of conduct has actually been, I'd say, it's legit utilization of knowledge and research. I think one thing that's very important is transparency, and my understanding, and I'm past the point of where at once upon a time, like 4 or 5 years ago, I looked more day-to-day involved, looked at the wording of like every single contract to make sure these things were explained. But in fact, it is explained to the users. But there's clear rules that if you're a worker on a campaign, you're not allowed to enter into a contract based on the prospects of those candidates. But there are types of knowledge or research that actually these markets provide an incentive to do it. And there are these concepts that were academic at one point, these concepts of super forecasters, and part of the personality of a super forecaster is that they actually, their opinion can be changed by new information, and they also have an idea of a mental model, or sometimes a spreadsheet model of, I need to look at this and this. So and the participation of those participants actually, the purpose of these markets and the reason that they're considered to be in the national interest is not just for trading, but for the price signals that they send, and as a source of truth. And so, maintaining the integrity of those models, achieve source of truth. And something, people sometimes don't realize about how protection of market integrity works. And I actually learned a lot about this when I went to the CFTC, and it was really cool because they had a room that basically looked like Minority Report with all these different screens that showed what was going on in a lot of different markets. But I used to think that protection of market fairness was purely preventive. But some of it is kind of detection and deterrence after the fact. But knowing that people are watching, but something that is really critical to that is the operator of the exchange knows who all of the participants in the market are. So maybe you did the trade Tuesday and you got paid out Wednesday, but on Thursday, we're like, oh, wait a second, this was really unusual behavior, and so there's some of it happens after the fact, and the fact that it happens after the fact is still part of the deterrent. And that's a widely accepted and very important part of a market integrity program.
Yeah.
And you know, I think it is actually very helpful that there's a lot more conversation about this, because, you know, it helps people know. And, you know, something, and this is something that, you know, it took a lot of work and iteration, you know, with the CFTC about, like, you know, most exchanges in derivatives, they've been trading kind of the same contract, you know, year after year, and they might list a lot of new contracts, but maybe, you know, there's just a few new contracts or new contracts that gain traction or add, you know, liquidity. So, you know, CME might list, you know, hundreds or more new contracts, but, you know, I don't know, maybe they get like 3 successful new contracts every 5 years or something. And I'm making up that number, but I mean, you know, they had the Bitcoin contract and then they did the mini, and, you know, but whereas on an event contract, there's events all the time.
Right.
And some are recurring, like, you know, kind of Fed funds, interest rates, economic indicators. But others are new, like, you know, when that ship got stuck in the Suez Canal.
Yeah.
And then you're like, well, when is the ship going to get out, and what are the and it has lots of economic, you know, implications. It's also kind of an interesting thing, and it captures everybody's attention. But this is finally a way for people to trade, you know, based on those things. But you get a lot more new ad hoc things coming up.
It really is at the convergence of markets and pop culture. And you've been able to strike a very important balance as well, which is fair markets and innovation, which I think is tricky to do, but we really appreciate you taking the time to educate us about it, and appreciate you fighting the good fight out there.
All right.
Thanks so much.
Thanks,
we'll
have a
good time on your panel.
Have a great week here.
Thanks for having me.
Good luck out there.
Oh, yeah.
And thanks,
great.
Jeff.
Oh, great. Real pleasure.
Guys, we're going to pan you over to the panels. We've got an awesome panel here live at the Bermuda Digital Finance Forum, day 1. Then we've got our next guest from the Midnight and the Millennium team. Stay right with us, guys. We'll be right back.
Everyone in this room, no matter what part of tech you're working in, you are at least one layer of that stack.
And what does that mean in terms of ecosystem? We're looking at ecosystem growth. What is the ecosystem?
I mean, the ecosystem in the end are the end users of the part of the stack that you're servicing. At Alpha Compute, we are hardware, firmware, and software, and also some of the middleware agentic layers, but we're concentrating on GPU as a service. So we have different types of ecosystems. We have our ecosystem providers that are in the energy and data center space. We have ecosystem that are all of the types of clients that are using GPU as a service. And then we stand up nodes for different types of layer 1s and other networks, like Telegram's Cocoon AI, like the Midnight Network. And what we do is we spin up nodes in order for the end users of the ecosystem to be able to use those products. So ecosystem growth on my side of this business really means to be able to provide the infrastructure so that people can use the ecosystem in the first place.
So I have a slightly different definition, I think. This is the Digital Finance Forum. So for me, the ecosystem is digital finance and Web3 and blockchain. I think the number has been quoted a few times already this week, about 500 million, or I think Charles said 560 or 580 million people who have touched blockchain and crypto in the world out of 8 billion plus, so that's like 5-6%. So if we're talking about the ecosystem, that's the ecosystem, like digital finance. Like, how do we get the remaining 95% of the world into the space?
And where does the Casper Foundation fit within that stack?
So Casper is a layer 1 blockchain. It's a proof of stake protocol that was based originally on research that came out of the Ethereum Foundation all the way back in 2015. And we are actually very much tailored towards compliant real-world asset tokenization, as well as the emerging machine-to-machine economy. Yeah, happy to talk more about that, but I think the ecosystem is getting everybody to participate in this new
Okay. Atya?
Happy to. I think there's almost another dimension, as you think of the ecosystem, which is how do you think of the tokenization, almost value chain, to use some of the TradFi expressions, or you can think of it from the issuance, so where you create the product on chain, the trading, the distribution of that, where you have the centralized exchanges, decentralized, you have then called post-trade, the custody in particular of the assets, then you have all the services behind, whether it's data, whether it's governance on some of these assets, And so I think that's a bit of the, I'd say, the end-to-end value chain that supports the digital finance ecosystem, so that one level below. Where Ondo is on that is we issue products on-chain. So we bring treasuries and stocks and ETF on-chain. We're the largest issuer of tokenized equities. We have about 70% market share globally. We then distribute them via a network of partners. These can be on the on-chain space, so partners like Binance, OKX, BitGet, et cetera, that are venues for the 560 or 600 million users on-chain to access. We have our own venues as well. And then we partner with the rest of the ecosystem. So we partnered, for example, with Broadridge to bring governance to those tokenized equities. We were the first partner, for example, with Franklin Templeton to bring ETFs on-chain. So we partner on the rest of the value chain, and we focus on really the issuance and distribution.
Okay, Patrick.
So we're even a little bit more narrow than that. We run a digital asset treasury focused on BNB. And BNB is really the fuel that runs the Binance ecosystem. Binance does 40% of global trading volume every day. The BNB chain has 58 million monthly active users. And at BNB Plus, we're really focused on generating yield in that ecosystem through a variety.
All right, we are back live from the Digital Finance Forum here in Bermuda. We've got our next two guests. We've got a double. We've got Fahmi of Midnight and Wasim from Monument. And it's an absolute pleasure to have you guys on. Welcome to the show.
Thank you for having us.
Thank you for having us. Yes.
Absolutely. First time in Bermuda for you guys?
Yeah, definitely for me. First time here. Loving it.
First time in Bermuda. It was very English. So as a guy from London, it was very English. So
thank you for bringing the rain with you, Fahmi.
Yeah, sorry.
Well, let's get into it, guys. I mean, there's a lot going on. Obviously, Midnight and Monument are both at the spearhead of innovation here. I'm curious from both their fronts, why we have you guys here together? What is some of the work that Monument and Midnight are doing together, and then we'll get in broadly.
Yeah, maybe I give you a little bit of context about Monument because it'll sort of explain why this is a great partnership. So Monument Bank, we're building the financial home for the mass affluent in the UK. We're a fully licensed deposit-taking bank, almost $10 billion in savings, 100,000 clients. We're the fastest growing bank last year. And the mass affluent, terrible term. It's people who effectively don't have enough wealth to be in private banking, but are not served by the high street banks. And so our mission, our vision, is to help people, know where they are today, plan for tomorrow, and grow and protect their wealth in a very seamless way. This is a time-poor community: doctors, lawyers, people in financial services. They're juggling work and family, and so the managing their wealth is not as easy as one would think. Just because you're affluent doesn't mean that you have the time to do it. Right. And so we're really bringing together savings, investments, and lending all in one app. So when we think about what does an investment proposition really look like, what does a saving proposition really look like, we want to bring the best products in the most simple way. And often we actually think about what are private banks doing and how do we democratize that. And so we thought the best way to start is we want to start with a tokenized saving product. The idea here is you're giving three things. One, it's an interest-bearing account. It's fully protected by the FSCS, so $120,000 in the UK for a person, $240,000 for a family, and it's given by a highly regulated, highly governed bank. This is really the foundation for what comes next. Investments, tokenizing investments is something we're interested, not normal funds. What's really important is you think about what are products that private banks have, which that today the mass affluent don't have access to. Right. And so the best hedge funds, the best private equity funds, if you want to get any into 100,000, into 1 million, doesn't work. No liquidity, can't borrow against that money. And so tokenization really unlocks that. Right. It becomes about access. You can do it for 5, 10K. It becomes about liquidity, and then it becomes about access, liquidity, and efficiency. Yeah. Bringing the cost to serve down so that you can give the product at a really good rate. But you need the right partner because banking is about trust, it's about security, and it's about privacy. And this is where Midnight comes in.
And I think, yes, this is exactly where Midnight comes in on the security, the privacy. And so we've got Fahmi. So tell us a little bit more about Midnight and how you guys are working here with Monument on this partnership.
Absolutely. First of all, thank you for having us here today. Midnight is what we call a fourth generation blockchain. If you think about the evolution of blockchain came about as a truth layer. Bitcoin was a truth layer because that you can own your own asset, move assets across borders without censorship, without control, central controls, because it came about following the financial crisis. And we've seen the evolution of that into Ethereum, the next generation, which was about programmability, using smart contracts, and third generation Cardano, Polkadot, Solana, and others, all about scalability. But what they've all overlooked about mass adoption is privacy. Today, we walk around this conference, we will introduce each other by name, where we work, where we live, but nobody discloses their bank account or their bank account details or their net worth. These are private matters for private discussions or for selected disclosures to certain groups. And yet every blockchain, public blockchain today, is permissionless and transparent. And everything you do behind anonymity will be discovered. You will get doxed. AI bots will figure out who you are. And then all your past patterns, behavior, transactions, wealth is fully exposed for everybody to see. Large corporations, large banks won't put their clients' assets on a public blockchain. So you have this bifurcation of public versus permission, private ones. The permission ones become siloed, and how are they any better than existing centralized solutions? So Midnight, I think, comes into the sort of the intersection of Web 3.0, bringing it closer to Web 2.0, which we call Web 2.5. Yeah. Adding a privacy, permissionless private network to counterparts like Monument, where they can come and program their private domain within this permissionless network. They decide who gets to access this, what assets come into this network, and essentially creating a secure environment that they can create compliance or rules around to operate within. The nice thing about that is that after other similar banks do that, they're all operating with a similar network. And they can find ways to permission access between each other or privately move assets around from each other. That's the long-term aim, but it's not just about finance. It works in supply chain. We have forensic evidence going through the Midnight Network. We also have healthcare data being used for interclinical trials. So this is about protecting the client's assets by creating an ecosystem which is fair and open, but it gives people control around what they do with them.
And this is all very sensitive data, healthcare, forensics, money, all of this very, it's necessary that we have privacy at the core of these pieces of infrastructure. Open question to both of you guys. I'm curious, how composability could work here. Yes. And composability, maybe not so much in the technical sense of what we've come to with DeFi and these sorts of things, but more so in the sense of how banks and tokenized deposits could work once you're starting to make payments and you're starting to bring more of these modes of finance together under one roof. And then on the blockchain front, we've heard how important privacy is. Blockchains like Canton and Ethereum layer 2s, there are more and more of these talking about privacy because it's so favored by institutions. Yes. And so I'm curious, given the necessity of privacy, how do you ultimately make sure that you're providing what some of the benefits of tokenization could provide, in the sense you can borrow against some of these things, you get some more liquidity, you get that privacy, but you don't give up some of those benefits of tokenization?
So if I can take this first,
sure.
About just privacy and blockchain in general, and then we're seeing him talk about why Monument chose Midnight, what the benefits are for him and his clients. So everybody talks about tokenization. So tokenization, we talk about democratization to access, fractionalization, which again helps with access. But the real value of blockchain and the truth layer is collateralization. Can I prove what my underlying portfolio is? Can I aggregate it? Blockchains are fragmented. Yeah. So what Midnight allows, and we will have the technology in the coming weeks, is a single private vault that can have all your assets across all chains represented in one place and can be controlled from one place. Now think about what that does for margin lending, borrowing, leverage opportunities, financing opportunities, and access. When it comes to privacy, you can't add privacy as a secondary thought. People are now adding it as a feature release or an update to existing systems. It's like me walking out my front door naked. Once you see me naked and I get dressed in public, it's too late.
Then you put
you can't put it back in the box. So you leave fully clothed. And in a humid environment like Bermuda, where we are today, I take my jacket off, I roll up my sleeves, I give you enough exposure that you're comfortable with and I'm comfortable with. That's selective programmable disclosure. And that's what Midnight's ethos is about. You build metadata as well as data protection. Everybody focuses on the data, but the metadata, who you are and who you're speaking to, is just as important as what you're sending and what you're doing. So we protect those layers, and through the smart contract, allow disclosures, allow identity as a gateway into a transaction or into a domain, allow certain assets to be eligible, not eligible, allow you to look through and provide proof of covenant about your trading activity, your portfolio structure, and everything like that. That is everything that existed in the TradFi world and the hedge fund world that I came from. And we're trying to bring that same ethos into what Midnight does. And then that's how we get to work with wonderful partners like Monument.
And so these universal vaults, it sounds like, tokenized deposits from Monument could serve as collateral in which you then have this portal to the entire on-chain world.
Potentially, yes.
And this is where I think it gets really exciting. Why do we partner with Midnight? There's three things. We talked about privacy. Then we want to talk about network, number two, but also tech philosophy. And I'll take them in reverse order. So when we built Monument Bank, we had a principle, which is whenever we want to become a legacy bank. We're a tech-first company. And so we said at the outset, we have to make a decision where we are going to be comfortable with it one day replacing our core bank, one day replacing our CRM, one day replacing our KYC platform. Actually done some of those. And where Midnight is great is actually it's a very similar philosophy. We're not making bets on any specific chain. It's an infrastructure layer that is private, and therefore you're kind of protected for the future. And it's not just legacy. And together then we can build that network effect. We have relationships with private equity partners that we can bring into the network. They have relationships with various hedge funds. And so then we can curate different products. We don't want many. That's the important thing. So for our client base in particular, it's about that curation. What are the 2, 3, 4 products that really make a difference to somebody's goal who's trying to grow their wealth, protect their wealth? But the savings is really that foundation, because you kind of got on there, and then it becomes the segue to everything else. So we're delighted to be really the first people who are doing tokenized deposit, bringing it to retail.
Yeah, and what does bringing it to retail look like? Is it making this front and center so that the bank depositors are starting to make some changes in terms of how they work with these products? Is it just a higher yield rate? Everything else is abstracted?
Great question. Yeah. So look, we often say the best technology is actually invisible.
Yeah.
Right. And so it really needs to feel seamless. It needs to feel familiar. So I often say modern Rails familiar app. So in many ways the journey looks really the same, and we provide good yield. So we're going to continue to provide good yield. We're going to do a fixed term product where people get access. But we start the education journey. What is a token? It's not a crypto, right? And the most important argument to make, and the most important educational element is it's actually not a crypto asset. It's simply different infrastructure. It's a modern rail that's allowing that access and really taking fiat deposits and making it into programmable money.
And this is something our industry has overcome as a collective. This industry is not about crypto, right? And the meme coins, cryptocurrencies, all these things. No, there's a bigger thing going on here. We're replacing the entire financial system rails, and this is a piece of technology. It shouldn't be as controversial as it is. The reality is that there's protagonists and antagonists when these things are changing.
It always is. Think about the evolution of finance. Initially, when shares were issued by companies, they were paper shares. You physically owned a share. You took it home, you put it in your banking safe, or your safe in your house, or you put it in a safety deposit box. Then that evolved to digital advancements. That meant shares are now digitally recorded. So blockchain advancement means those digital shares, which are whole shares, can now be fractionalized, brought onto rails that are truth layers, allow access points. So again, we think about the fragmentation that's happening in blockchain and the industry. Blockchains are infrastructure layers that should be augmenting existing financial rails. That's why we talk about Web 2.5. So what we can offer, like I say, is a unifying privacy layer within Midnight, all chains, all assets. So if you are an issuer or a token, it doesn't really matter where you sit. If you sit within Midnight, then it's private. And then you get access, distribution. That's been the major issue around tokenization. It's not supply of technology. We know you can almost tokenize everything. So where's the distribution? And with Monument Bank, you've got a client or a bank servicing mass affluent clients looking for additional yield, access to fractionalized assets that they previously were denied access to. So we think it's a wonderful opportunity, and we're happy to support their growth. And it's acknowledgement of blockchain is matured as an industry. We have a central bank like the Bank of England, one of the top 4 central banks in the world, who are supporting Monument on this journey. And for us, to Wasim's point, we want to be invisible architecture, infrastructure. Nobody should be talking about Midnight. Often people want the token to go up, so the blockchain does well. We want transactions and services and networks to be created on Midnight so that there's utilization, use, and therefore Midnight becomes no different to a technology stack. They use cloud services, cloud providers, databases, online and offline, all these different things. And Midnight just becomes a stack that offers their clients access to products. And for their clients, it's a banking app which gives you services and opportunities. They don't almost know it's a token or a blockchain behind those yield assets.
Yeah, and there's no need to. They don't need to know as long as it's safe, secure.
We don't tell our clients, hey, this is a cloud native bank with lots of microservices, and that's they care about the outcome.
Absolutely. As do we. Guys, thank you so much for taking the time, and congratulations on the partnership here. It feels like this is the first of many, and there's plenty more to come. So appreciate you taking the time and helping share things here with us here on the Rollup.
Thank you for having us.
Yeah. Have a great rest of your week, guys. We'll be right back. We're going to cut you guys over to the panel that's happening downstairs. Don't go anywhere. We'll be right back after this.
Now link into the workflows that investors are used to using for their traditional institutional investments today. So how do we think about the users in terms of where they are and meet them where they are, not just the on-chain users, but the non-on-chain users that are not used to being on-chain in a way where they are comfortable. And then based on that, what are the actual products, use cases that they want versus what are all the things that exist in the world that we can put on-chain?
And do you think that the technology, the development, the stack, or the layers of an infrastructure stack could actually be the solution to some of the friction that we see from regulation? I mean, we talk about privacy, we talk about identification and other things. Is that what you think could be a major development?
I think for the first time, at least in the US, we've now got the regulatory framework to actually implement that, where before it was just so unclear and it was being done offshore. Now with the SEC rules, the Clarity Act, the Genius Act, we've now got a framework we can build on.
True, you do need clarity,
so
no pun intended.
Regulations are hard to engineer, right? But everything else in the stack, and I guess I'm coming from the perspective of being a CTO, but everything else is an engineering challenge. So we at Casper believe that, particularly with the Casper manifest that we announced today, that these are all engineering questions with engineering answers. We know what the issues are. We're talking about them here. So we're solving them.
Well, I think on one of the panels before this, the one with banking rails, talking about just being able to onboard somebody, both corporate and individual, in sort of 20, 30 minutes. So the technology I'm seeing as a user is getting better and better in the existing system. I totally agree. If it can be hidden behind the scenes, you don't know you're using it, then you're going to get further adoption.
Yeah, I think
on that point, I'd like
Sorry,
to
go on.
merge with, this is where tokenization, AI start blending, where you can use a bunch of AI in the onboarding process and KYC, you can make a lot of that friction disappear. And then if you start thinking about agents and how do you think about investment, robo-advisory, creation of portfolios, customization, there's a lot you can do with the technology, to your point, that is entirely novel and can help address some of the bottlenecks that we've seen historically but may not be in the future.
Yeah, I think when you're talking about the best UI UX for onboarding, where everything's invisible in the back end, but you're using blockchain, you're using AI, you're using confidential computing without knowing. Probably the best example is Telegram. How many people here have Telegram on their phone? Yep. How many people are aware that Telegram has a confidential computing AI network in the back end? Yeah, exactly. So all of the new AI native features that are rolling out in Telegram to over 1 billion users are using the Cocoon AI network, which is on TON. It's a decentralized AI network that is confidential computing on Intel TDX, so it's fully encrypted end-to-end down to the hardware and firmware level. So any of the AI new native features that you're using on Telegram are fully encrypted, and in a similar way to XAI rolling out in X with Grok. That's the same thing that Telegram's doing with Cocoon AI, but you don't know that. Telegram doesn't need to tell you that in order to make it easy to use. So I think having massive onboarding through amazing UI UX, which Telegram's definitely one of the best examples of that, and fully vertically integrating blockchain into the back end and fully integrating other types of encryption technologies like Intel TDX and decentralized AI is just an amazing opportunity for more than 1 billion people around the world to be using privacy-centric technologies without asking for it or having to understand it.
Okay, so let's go fast forward. 2027, we're on the same panel in the same room, hopefully different weather. But what do you think is one hot topic that we're going to see in 2026 that we won't be talking about next year? And what one thing do you think we're going to be seeing as a hot topic that we will be and hopefully are on this stage talking about next year?
Is your agent running on confidential compute, or can anyone prompt it and get all of your data?
Is that what we will be talking about, or that we hopefully won't be talking about?
Hopefully we'll have solved that by then.
Okay.
I'd like to be talking about how agents can participate and drive transactions in an automated, independent way.
Alrighty, guys, we are back here at the Bermuda Digital Finance Forum, day one on the lovely island of Bermuda. We have pristine 4K video footage somehow from an island in the middle of the Atlantic. This is the Rollup. We are back with Sandy from Franklin Templeton and a new guest, Gurpreet from Kraken Institutional. How are you guys enjoying Bermuda? Welcome to the show, guys.
Great to be here. Thank you.
Awesome.
Thanks for having us.
How's the island treating you? Any first thoughts? Was it what you expected?
Beautiful here. Yeah.
It's beautiful.
Yeah, it's definitely, it feels like an intimate professional setting for kind of this next evolution of digital assets that I feel like the entire industry has firmly realized that we're in, and just each conference just kind of further kind of cements that into stone. And so, guys, Franklin Templeton and Kraken are working together on a variety of new products, bringing different assets on chain. Maybe let's just lay the land here for why Kraken and Franklin Templeton makes sense and just kind of understand what this means. Sandy, maybe you can just give us a bit about your perspective about expanding your asset base on chain.
Yeah. So look, we really have been looking at what is happening in the landscape, looking at who's doing things that we think are smart and creative. And that's really what put Kraken on our radar. And then we met Gurpreet and the team, and we really found like-minded thinkers around really understanding the potential of where the space is going, right? We are not looking to recreate the world that exists today in financial services. We realize that these technologies give us the power to redesign that world and make it better, make it more accessible, make assets work more effectively, give people more financial inclusion and opportunity. And you don't have to be a giant institution to take advantage of these opportunities. But giant institutions, too, should get the benefit of all of these new innovations. And so we felt like we were very like-minded. We really look at what they are bringing in terms of a new distribution channel, insights into a new audience and how they're using these products, creativity in how they are building their own business and really building a partner network. And we do believe this is a network-driven business in crypto. So we were very excited about working with them on this partnership. And there's many facets to it. And we're starting with things that are here and ready now and today. But this is going to be a partnership that builds over time and brings things that I think are going to be very groundbreaking to the market.
Awesome. Yeah.
Absolutely. I think first principle of Kraken is we want to serve our clients and we want to bring the best institutional products to our clients. When we met Sandy and the Franklin team, we realized this is the leading asset manager globally and they're forward thinking. They've been looking at digital asset space before anybody else. And the construct of products we're building today with XStocks and tokenized yield is something which our clientele actually wants. And I think this will be a great partnership for today and the next 20 years.
Yeah, and Gurpreet, there's been news of a confidential IPO on Kraken's side of a large fundraising round as well. Needless to say, the Kraken brand, once an exchange back in 2017, is now almost like an institutional prime brokerage, right? It's really expanded its product offerings, its lines of business. How do you best describe kind of where Kraken's main focus is going forward now, right? With the likes of these partnerships, what is kind of this broader vision for Kraken as you move forward into this institutional era, into this kind of prime brokerage feel?
Yeah, I mean, I'll speak from the institutional lens. Kraken, again, if we want to serve our clients and make sure we continuously build and provide the best services and products in the industry, right? We want to make sure Kraken's a place for people to custody their assets, trade their assets, and borrow and lend, right? So through a full suite prime service, we have accomplished that. We serve leading banks, leading asset managers today. I mean, Franklin right now, we can offer like real-time money market yielding products with Benji, right? For example, why this is important. I think today, for example, if somebody wants to buy a house or somebody wants to put a large investment into private technology, et cetera, there's a gap between when the funding is required and when the money's in the bank account. So in that gap period, Benji provides a solution where they can basically earn yield while there's a gap between the funding required. So So Kraken is institutional from an institutional perspective. We launched tokenized equities, X stocks, 30 billion traded. Tokenized credit is the next thing. So right now we're working on like high liquidity products, equity and credit, and we'll go full through the stack, right? We believe in few years, tokenization will be the financial pillar across the world. And we, with Franklin, are the forefront of that. We're innovating right now and continuously we'll keep running products. So XOX is live, Franklin tokenized money market funds is live, and we'll continuously work to build more products.
Yeah, and I think like the evolution that we're seeing is kind of we had stable coins obviously proliferate over the last 4 or 5 years, and we're kind of just moving down the risk curve almost. You've seen growth of T-bills on chain, now obviously products like X stocks bringing equities on chain, and then anything all the way down to like the private credit side of risk, anything in between. It feels like there's kind of like this evolution happening. Sandy, how is the Franklin Templeton strategy with this type of partnership with Kraken? How does this evolve, and how are you seeing this evolution of like, here's all the products, ETFs, assets that we have as an asset manager, how are you thinking about bringing those on chain with partners like Kraken?
Yeah, so I think that the most important thing to differentiate is that there's a difference between the products we deliver and the expertise we possess.
Sure.
Right, and so Franklin Templeton's a $1.74 trillion asset manager. We have a lot of products and we have a lot of audiences that we serve with those products, but none of them are the crypto native products, right? The assets that we are building up in our Benji suite, the assets that we're going to be capturing and building in conjunction with Kraken, this is a new audience. These are all net new dollars into Franklin Templeton. And new audiences need products that fit the way that they think about and approach markets. Sure. And they need digitally native products, right? This idea that they're going to keep reconciling back to systems that take 24 to 72 hours to actually process a transaction, when you can have a transaction processed within seconds in a digitally native environment, that just doesn't work when you're thinking about what does the future portend. And so I am really excited about this idea of using their expertise in understanding this audience, our expertise in having all the potential building blocks to put new types of investment products together that can cross public and private, that can cross permissioned and permissionless, right? You need a whole array of products to participate in the ecosystem that's developing. And this is where I think the power of bringing together the crypto native and a traditional firm like Franklin Templeton, who also believes in digitally native offerings, is going to be profound, right? It's going to set the bar that the rest of the industry is going to have to follow.
And I think one of the things, Sandy, is that there's this user base that Franklin Templeton and other asset managers don't have access to, which is this fully on-chain user base, folks like who have been in the space for a while, who choose to live their entire financial life on chain. However, the way that we've experienced this is that is the riskiest part of the portfolio, but it is also all of the portfolio. Okay. But I think that the way that this transition is happening is that no longer is on-chain just going to be the risky, 100x, 10x, very aggressive part of the portfolio. It's just the portfolio now. And I think that there's a kind of a mental shift happening here, guys, where instead of, having to pull your funds off-chain to go buy your gold or buy your T-bills or buy your equities, your average user's on-chain portfolio will start to look a lot more like a traditional portfolio in a brokerage account. And that, for the people that really like to be on-chain, is a massive breakthrough, because it is a pain to go off and to go deal with that entire environment, especially if this is what you're used to. How do you guys think about this kind of portfolio construction evolution as well, right? I mean, it was just crypto assets. It was high yield in DeFi. It was minefields of smart contracts. It's really evolved into now being a place where in the on-chain landscape, you can actually have a diversified portfolio across several asset classes. How do you guys think about this evolution of user behavior, and how do you kind of cater to that?
Yeah, I think the most important thing, and this is really the reason why we chose Kraken, is because the biggest mistake you can make is thinking, I'm going to just take the portfolio products that I offer today in a wealth channel or a direct-to-consumer channel and transport them into a tokenized form and offer them on-chain, right? That is not what this audience is looking for, right? This is a more sophisticated investing audience who really understands that every asset they possess is an asset that can have utility beyond just sitting in their wallet. And therefore, it needs to be digitally native, it needs to be transferable, it needs to be interoperable, and it needs to achieve aims that in many instances fit a risk-reward profile that is far more aggressive than what you would get in traditional wealth channels. And so the products that we need to develop for this audience, the yield products, the equity products, they need to be products that really speak to that investor's core interest. So I think this is an all-new channel. I call it the direct-to-wallet channel, right? You have direct-to-consumer. I call it direct-to-wallet. And I think that this direct-to-wallet distribution channel is really going to be where innovation happens and where it's going to happen so quickly. And the benefit of the assets that we're going to create for this channel are going to be so superior that you're going to see more and more of the core assets that are in today's traditional system migrate into this direct-to-wallet channel.
I have a feeling your wallet is pretty risk on.
Yes, I'm pretty risk on.
Gurpreet.
Yeah, to add to that, I think right now, facts from last year is 300 billion in stable coins.
Yeah.
We believe the next few years will hit multi-trillion, right? All that users in the digital economy need to earn yield. So we have the crypto native with like, USDC, Athena, et cetera. Now with Benji and a Franklin yield product, we're offering more institutional products that the user can decide which they want. So as Sandy mentioned, this speaks their language. Yeah. They're looking at the Benji token as they look at a stable coin like USDC earning yield. So I think what we're doing, Franklin, is really cutting edge because as one thing, consumers or users do not want to, like for example, a lot of other companies want to do 10-year lockup tokenized funds.
Sure.
That's not interesting.
No.
Like working with Sandy and creating a tokenized yielding product, which yields above money market funds, say 6, 7, 8%, with short duration lockups, is a very in-demand product, right? Because right now, if crypto volatility is not happening and Bitcoin prices are flat, people want to earn yield in their dollars or Bitcoin.
Yeah.
And finding a simple institutional branded solution that serves this use case is really, really compelling. So really excited about this.
Yeah.
And this is where you need to blend, right? You need to blend public and private credit to really achieve these outcomes in a way that fit the demand of what the audience is looking for. And that is just not something that we are seeing in the traditional markets, right? They still think of these as distinct asset allocations, distinct asset classes, right? And so it's a new mentality, and you need to design for this investor specifically. And they're really blazing where the industry as a whole is going to go. I have no doubt that more and more the traditional channels are going to start to follow and look increasingly like the channel that Gurpreet and his team are building already in Kraken.
Right. Yeah, and there's a user base there, Sandy, that perhaps may never have had a Schwab account or a Franklin Templeton account, but you can still access these consumers and these investors by doing it in this way.
And a lot of them have come and have built their wealth through crypto, right?
That's what I mean. Like,
and so they want to diversify, but they don't want to go to these channels that have poor consumer experiences, where you're building in all of these delays, where they control your assets, right? This is not that world.
But they still want yield in the bear market, for example. They may not want to go into a stable coin, into a DeFi protocol that has excessive risk. They may just want stable yield on chain.
Yep.
And so it's your way to reach this kind of new investor class.
Yep.
Yeah. And so when you guys are thinking about expanding this, right? This is kind of the early innings of what a Franklin Templeton and Kraken could do. As I mentioned, Kraken potentially going public here this year, more product offerings, more kind of institutional facing offerings. How do you think about expanding access to Franklin Templeton's products through Kraken's suite of offerings? What does that expansion plan potentially look like?
Yeah, Sandy mentioned, I think a lot of people talk, we executed, and we're live. And I think we look at tokenized gold from FT, and we'll also, as we see, we have the distribution platform. We see what consumers want, right? And we'll work with the Franklin team to ideate and incubate products to serve the consumer. So we got the money market yield, we got a high yield product, and tokenized metals to the ETF. And I think what's most important is cross margin, right? Somebody can have a Benji earning, say, money market yields, can borrow against that, invest in Bitcoin. So what also innovation is, whether it's X stocks, owning Franklin ETFs. So if one believes they want exposure to both equities and Bitcoin, this solution allows that. So like being on Kraken's platform, one can cross margin across all these different asset classes with the same dollar they have. So I think right now we've achieved cross margining, we achieved tokenizing ETFs, we achieved tokenizing money market funds and tokenizing yield. And I think, we will figure out what to do next.
Yeah. And now look, we're doing an exciting ETF drop here in Bermuda.
Yeah. Tell us about
to
it.
To the citizens here, and this
Yeah.
is a great, I think, opening gambit to put these assets into people's wallets and let them really start to utilize it.
Yeah, I think one of the interesting products that could be used here for a product like what Franklin Templeton has with Benji is this idea where you have your stable coins in a perp balance or in a trading balance when you're just kind of holding them, waiting for your next trade. If there was like an auto click or an auto ability to just take those, put those into something like a Benji, get that yield while you're waiting, and that is kind of like your collateral is earning yield instead of just being a stable coin, that would probably be very compelling.
100%. As what
Maybe that wasn't supposed to be said, but
what crypto and digital asset does is we're offering the yield back to the consumer.
Sure.
Right? And working with Franklin, we're offering, making sure the consumer benefits, and we're democratizing what institutions historically had with either Benji or high yielding products available to everybody in Kraken's distribution globally.
Yeah.
In over 190 plus countries.
Yeah.
So, as a core thesis, I think what's next is looking further into the product landscape as private stocks, as commodities, et cetera, is making sure that we can provide the everyday user in the world access to what only institutional investors can buy today.
Yeah. And just kind of a more kind of broad question here. I think a lot of the tokenization focus has been on let's bring the U.S. equities market or the U.S. product line for T-bills, for the U.S. dollar, right, a lot into the hands of international investors and giving them access to U.S. equities markets, to stable coins, to U.S. dollars. But the emerging markets are having some of the best performance that they've had in 25 years right now. The general kind of index of EEM is performing extremely well. And I think there's more demand than one would expect for US investors or Western investors to actually invest in more of these kind of like emerging market ETFs or emerging market funds. Now, you can have access to those in traditional brokerage, but again, you run into the same issue of this investor class wants to stay on chain. How much thought are you guys putting into bringing more of the emerging market asset classes on chain to give investors access to these more esoteric types?
Yeah, I mean, this is where Franklin's suite of products is really going to become, I think, instrumental in what we designed together. I mean, don't forget, with Templeton and the acquisition of Templeton, Franklin is one of the top emerging market asset managers globally, right? I mean, we have been in some of these countries that are considered emerging markets for 50 years now, right? So, I mean, the brand outside the U.S. is probably even stronger than inside the U.S. So I think this is where we really start to look at how do we engineer the return streams, right? Because crypto is all about the return streams. Sure. It doesn't matter what the underlying product is. It's what do I want from a return stream in my portfolio, and how do I leverage that return stream to get even more, right? And so I think this is really where our design, our collective design experience, and the experience that Gurpreet and his team and Franklin and our team bring from our traditional worlds where we all grew up, and translating that into these new opportunities, right? This is where I think the creativity and the magic happens, is really, it's the combination of the crypto and the traditional finance. It's not one versus the other. It's how do you use this innovation of these new rails and these new wrappers and these new programmable assets to create something that has never existed before, but using the building blocks that have traditionally driven financial advancement throughout the entire world.
Yeah. Gurpreet, anything on your side on the emerging market side just to close us out?
Yeah, I mean, I think what stable coins have done for the U.S. is remarkable, right? I mean, I believe Tether is one of the largest buyers of U.S. Treasuries, right? And frankly, like, while we might see in local currency terms the yen performing really well, I mean, look at the Indian rupee's all-time lows. In fact, I counter that. I think the U.S. has probably performed the best.
Sure.
And I'm very long U.S., but I think, with that said, I think we want to provide a suite of products, and we'll work with the Franklin team to have an emerging market ETF. I mean, they already have these products.
Yes, exactly.
So we're going to, like I said, it's a start, and we're going to go the full product suite one by one, right? We can even have, we'll work with Franklin's team to ideate what emerging market countries performing the best in equities, and how we can provide that, same investment profile to our users. So as Sandy mentioned, it's early days, but the technology's there and the partnership is there, and we'll execute step by step.
Yeah, amazing. Sandy, Gurpreet, thanks for your time. Enjoy your time here in Bermuda. It's a lovely island. It's a great conference. I hope you guys have a great week, and congrats on the partnership.
Great.
Thank you so much
for having us on.
That is Sandy from Franklin Templeton and Gurpreet from Kraken Institutional. We are live here at the Bermuda Finance Day 1 here on the island of Bermuda. We're going to pass you guys to the panels down in the main stage and be back with our next guest.
Traditional gambling is actually wildly extractive, right? Sportsbook VIGs are large and they're increasing. Casinos take fat cuts wherever they can. And even things like contract for difference brokers in the EU internalize trades against their users. We're focused on investing in venues that reduce these take rates and all of this speculative activity, including P2P betting exchanges like Novig and Triumph for real money gaming. Our sixth theme here is programmable coordination. The TLDR here is that tokens, when designed well, are actually superpowers, which I know is crazy to say these days. The first concept here is DPIN, and Multicoin was actually pretty helpful in pioneering this category. Our investment in Helium back in 2019 was probably one of the first institutional bets on DPIN. Our thesis at the time was pretty simple. Instead of one company raising billions of dollars to deploy hardware, you could use tokens to incentivize anyone anywhere to install hardware and earn some ownership in the early days. Since that time, we've backed some other DPINs like HiveMapper, which is building a decentralized map using dash cams, and GeoDNet, which is building a decentralized GNSS network incentivized by tokens. Across all of these DPINs, though, I think the pattern is pretty consistent and it's clear. Tokens align incentives, infrastructure gets built faster and cheaper than any single company could manage, and early contributors can capture real ownership and upside in the protocols that they contribute to. Theme 7 is credibly neutral blockchains. This one's actually pretty simple, but I really think it's underappreciated. Our view is that finance companies don't want to build on competitors' platforms. So E-Trade is not going to want to build on Robinhood chain, and Adyen, in our view, is not going to feel great about settling on Stripe's Tempo chain. And actually, if you think about it, TradFi learned this decades ago. Stocks clear at DTCC and not at individual exchanges. Payments run over Fedwire and SWIFT and not bank to bank. The core plumbing has always lived somewhere neutral, and we expect that to be the case moving forward. As such, we think that chains like Solana and Ethereum and Hyperliquid will attract more issuers, more liquidity, and more developers precisely because there's no single company that controls them. Corporate chains and consortium efforts are going to struggle, in our view, to build broad ecosystems because the trust deficit is just extremely high. Our last theme that we're excited about is cryptographic primitives. So as I said earlier, stablecoins give AI agents a way to pay each other. But in a world where AI makes it really hard to tell what's actually real online, we're going to start to need tools to verify identity and data without creating massive honeypots for hackers. And we think there's 3 interesting opportunities here. The first one is proof of personhood, like from our portfolio companies ZK, and WorldCoin. This effectively lets people prove they're human without actually revealing who they are. The second exciting opportunity is fully homomorphic encryption, or FHE for short, which lets computations run on encrypted data. Things like underwriting, risk checks, and compliance can happen all without anyone actually seeing the underlying information. And we've backed Zama and Phoenix in this space. And then the third opportunity here is ZK-TLS, which effectively allows agents and apps to check real off-chain facts, things like income and bank balances, directly from trusted websites without exposing the user's raw data or logins. So I understand I covered a lot of content and ideas today in, I guess, 15 minutes. If you want to digest all of this in written format, you can scan the QR code that directly links to our 30-page thesis post on the space here. If you happen to be a builder working on any of these problem sets, please come find me after the talk or reach out to me on Twitter. Thank you all.
right, everyone, we are in the home stretch of day one, and we're saving a great discussion for last. Up next on stage, digital assets and insurance, on-chain integration and security.
All right.
That sounds like 4:30.
Pretty much. Well, good afternoon, everyone. Thank you for staying with us. And I would just feel so sad to, I was talking to my fellow panelists today. Why did you really have to put insurance and digital assets towards the end, just, standing in the way between the last part and the cocktails? But here we are, so we will try to keep it as engaging as possible, and hopefully we can add value to this very interesting first day of Digital Finance Forum. So my name is George Alayon. I'm Head of Insurance Innovation and Deputy Director at the BMA, and our role today is just really to complete the conversation about this on-chain and digital finance economy that we are facing here. And for the most part of the day, a lot of the talks has been made about on-chain integration, 24/7 trading, real-world asset tokenization, crypto rails, building crypto rails, and all of that. And one piece that is missing is, which is what we're going to unpack today, is about risk transfer and insurance. And mind you, with all the talks that we have, discussed today about this, the velocity of, the digital asset space, and we combine that with AI, one way or the other, we're going to have to be dealing with risks, right? And, in a scaled ecosystem, insurance is going to be a critical part of a risk management framework of an economy like this. And so, luckily here in Bermuda, we don't talk about insurance in isolation. And this may not be a very well-known fact here for some of you who are first time in Bermuda, but way back in 2018 when the Digital Asset Business Act was introduced and created, we also actually made some parallel enhancements to our Insurance Act, which is in the introduction of the regulatory sandbox, the innovation hub, and the creation of innovative classes within the insurance sector that's allowed to complement and actually empower this ecosystem to also manage the risks that are going to be inherent in this ecosystem. So today I'm fortunate to be joined by these wonderful panelists. Actually, two of them are actually part of my supervisory portfolio at the BMA, and so I'm really honored to moderate this panel today. So to my left, I have Joe Julkowski, CEO of Realm, and then I also have Freddie Mead, Managing Director at Howden Re, Henson Orser from Soter Insurance, and then finally we have Rick from Institutional Asset Management perspective. So getting to the conversation right away, 8 years or so since 2018 when we enhanced the insurance ecosystem here to allow for digital asset business to flourish. Has insurance kept pace with the digital asset business enhancements that has been? So maybe I can start with you, Joe, just really talking about what has been the factors where insurance has improved the outcomes for the digital asset ecosystem overall, and where are the aspects where we still have to grow and mature? So maybe I can start with you.
Yeah, I mean, if the question is, has insurance kept pace with the pace of innovation in digital assets, the answer is no. Broadly speaking, we've got a $6 trillion market, right, filled with some of the biggest balance sheets in the world, and when you look at the pace of the accommodation from that capital to companies pushing the boundaries of innovation in the digital asset space, there's still a major mismatch, right? And I think the good news, of course, is if you look at the amount of traditional insurance market participation today versus 2018, 2019, 2020, certainly there's more participation. But there are amazing things happening on top of this technology that become, I think, far more adoptable at an institutional level with institutional risk transfer. And obviously there are a lot of people on this panel that are working toward that conclusion, but has the market kept pace? No, still lagging.
Thank you. Freddie, now maybe just because your company sits with the, between the insurance and then the reinsurance sector, so maybe from your perspective, anything to add from what Joe has said?
Yeah, 100%. I mean, it's very, like, kind of insurance and reinsurance is like a hugely complex market just in terms of products and the volume of capital that is transferred around the world. And it's, kind of the access to that capital is, the barriers for entry are very high. So I think from, both kind of, I guess, the insurance products, working with digital asset firms to free them up to, with the like realm of doing it to free up their operations is definitely opening up more interest in potentially the kind of infrastructure capabilities coming back the other way to insurance and reinsurance, where actually the kind of tech coming back to improve the operations of the insurance and reinsurance market benefits are huge. And I think given the complexities of the market, there's no one kind of lightning bolt that's going to solve the issues, but we're definitely seeing education on both sides get to the point where now I think we can hopefully see more adoption.
And the good news is that Bermuda is not stranger to complex risks, and depending on where these digital asset business companies are in the stage of scaling up in their, whether that's a captive capacity that they need or a primary insurance risk management need, or even for an index-based, all of that, we already have it. We regulate it here in Bermuda, and we, of course, I'm biased. I'm from the BMA, so in our point of view, we try to manage it well, especially all those dilemmas that we need to manage. So Henson, if I can get to you from your point of view as well, being as a specialty insurer, anything to add to that same question where we have to still mature, or maybe just the basic question about whether we have kept pace with the advancement or not?
Yeah, so, and it's interesting to think about DABA from 2018 because there's many other even more developed jurisdictions that still are on their journey of trying to make sense of regulatory framework and clarity. Obviously, DABA was very early days and visionary, as we heard Premier Burt talk about this morning. But I like to take a step back and think about where the industry has evolved since 2022, when we had a crypto meltdown, flash crash, and a lot of losses. And so on the one hand, DeFi worked perfectly well in 2022 with people on their Ledger Nanos and MetaMask wallets and participating in DeFi, and the smart contracts worked. And that DeFi did what it was supposed to do. It was where you had unregulated exchanges, particularly in FTX, which didn't have any compliance, KYC, AML, no separation of client assets, no auditing, no separation of proprietary trading versus market making, all these things that were wrong. And of course, you had fraudulent activity as well, and people got badly hurt by that. And so there has been this incredible need for compliance and licensing, and we've seen that adoption. Along with that, there's been some required needs by regulators for financial institutions getting licenses and involved in digital assets to get insurance. And as a result, with sort of better operational and compliant capacity, I do think to some extent the capacity from traditional insurance balance sheets, it has increased. I think that the language, the policy language, which was a real sort of hodgepodge of traditional insurance policies. You look at something like Specie adapted to digital assets. And of course, there's new entrants like us providing some capacity. So it has evolved some, but the amount of insurance capacity in the market space compared to, as Joe just said, the size of the marketplace is drastically undercovered.
Yeah, and that's the thing, right? The nature of this insurance sector, because accidentally as well, coincidentally, I also manage the cyber insurance thought leadership within the BMA. So we see that a lot as well. Like the whole cybersecurity landscape is quite massive, And what the insurance sector is trying to do is try to put it in a workable solution, some aspects of it where you can actually, the insurance solution is able to provide that coverage to manage the risk. So I see that as well, that parallelism within this space, and it's just amazing how we can, really also try to manage that risk by matching, the exposure with the actual assets. I want to ask this time with Rick, because you offer a unique point of view, because these three gentlemen that I have, they handle the underwriting, so they're more on the liability side of the balance sheet, so the right side of the balance sheet. But you represent the institutional investing side, which is the left side or the asset side of the balance sheet. And so maybe from your perspective, the same question, and maybe where the insurance industry still need to mature at this point.
Yeah, so thank you, George. So when you think about Franklin Templeton, we're almost an 80-year-old asset manager. When you think about the insurance business and industry, it's probably a little bit older than us, right? So I think there's interesting parallels between what we've done as a large conservative asset manager, a conservative insurance, reinsurance industry, but you can definitely take cues from us as how we started our journey in the digital asset ecosystem. And I think it's a very unique vantage point to kind of see what a large asset manager like Franklin Templeton has done in this space. When we really started thinking about digital assets, it was more of an idea. And from that idea came about the ability to be humble, to learn, to take risks, but to take calculated risks of how we look at transforming an entire asset manager from being a conservative but innovative asset manager.
Alrighty, guys, welcome back to the Bermuda Digital Finance Forum, day one here in the lovely island of Bermuda. Everyone's on island time in this entire island except for everyone at this hotel, where deals are being done, licenses are being granted, and partnerships are being struck. We're here with Andrej of Bitcoin Suisse. Andrej, welcome to the show. First time having you.
Thanks
Good to have you.
Thanks for having me.
Congratulations on the licenses, on the news so far. Before we get into that, how's Bermuda treating you? Is this your first time here?
First time on the island, but so far so good.
Nice.
Weather could be different, but I'm Swiss, so I'm used to the rain. But no, all good.
Very cool. Well, you are co-founder and CEO of Bitcoin Suisse. This is one of the oldest premium crypto brokerage, crypto financial service firms. Excuse me. You guys represent Switzerland. Because you've been at this for so long, it feels like you've got plenty of experience in the industry. But just today, you announced that you've gotten these approvals for some new licenses. How will these licenses ultimately help accelerate the business? What do these licenses mean? Let's dig into this.
Yeah, happy to go into that. So, I mean, we today received from the BMA the asset management license, or actually two licenses or one license and the registration, which helps us to provide asset management services towards clients, including advisory, but also discretionary mandates, and to also manage our own products. So that's amazing for us because we have been waiting for that for quite a while. But at the end of the day, it's very demand driven. So whenever we build something, we do it primarily for our clients. So we cannot really anticipate in what direction the market goes, or we cannot predict it, but our clients are usually quite a good indicator. So whenever they have some sort of requests or demand, we try to facilitate that and provide best-in-class service.
Yeah, man. And I mean, I think that we've seen this regulatory climate globally become more and more receptive to the digital asset industry, right? I mean, in the States, we're seeing clarity at its final touches. We're seeing globally in the EU with the MiCA regulation really making a strong push. I mean, this is going to be an impactful license for your business. How do you think about, from your business perspective, what this easing regulatory climate allows you to do? What risks does this allow you to take? What kind of next big swings are you looking to tee up as a result of this kind of better climate that we're currently in?
Yeah, 100%. I mean, the regulatory clarity is for sure a key enabler for our business at the end of the day, because else you actually take risks, but the regulatory clarity allows you to actually reduce risks because it tells you directly what is allowed and what not and how can you do it. So that's why it adds a lot of clarity to the business, and for us that's of course always appreciated. And we try to position ourselves in those regulatory frameworks where we see that the regulator understands our business, but that is also committed to continue supporting the business and the industry actually more long term, and that's why we are here.
How has the business changed since 2013 when you guys first started?
How much has it grown?
How much time do you have? I mean, a lot, obviously. So 2013, we started as a classic startup in Wild West times, more or less. And we, in 2014, wanted to become self-regulated because we were touching crypto, and that was, money in our perception. But nobody really knew why we wanted to become regulated. So for us, it was a key enabler in order to actually bring in trust and reputation in this kind of anonymous world of crypto assets. So that was the very early beginning. And since then, of course, more and more institutional demand picked up. Governments are looking into it. Sovereign funds are looking into it. So it's a complete different world today.
So when you say self-regulated, you mean to say that there's, essentially early on, there was no regulation, but you foresaw that this industry was going to be regulated, and you said we want to be in the lead when the regulation comes, and so we're going to regulate ourselves so that we are one of the leading examples when the regulation does come.
100%. So we saw Bitcoin as some sort of a form of money, or at least as an asset. And even though a lot of, let's say, the lawyers and even regulators at that time said, you don't need to become regulated, Bitcoin is nothing, right? It's the legal clarity and certainty of what it actually is was for many years not really clear and given. But we were touching money, and that's why we wanted to become self-regulated for everything related to AML. And that's why we then put ourselves under an existing regulatory umbrella in Switzerland that was like auditing us then on AML topics, similar to other asset managers and so forth. So that was the very beginning, quite many years before anybody else in the industry picked up on that. But we saw it as a key enabler for growth and for to provide actually legitimacy to the industry.
And now you're leading the international expansion for Bitcoin Suisse. Do you find that now, because there's sort of these fragmented regulation complexes, was it easier in the beginning to go out into these different jurisdictions? Because, like you said, it was, at least over here, we considered it the Wild West. There was no regulation. You could kind of go where you please. Now there's these different regulation, these jurisdictions, you need these licenses. How do you arrive and how do you approach the international expansion now, given all of this regulatory complexity?
It's a good question. It's a very good question. So, I mean, originally we were focusing on the Swiss market because Switzerland, when it comes to asset management, banking, and so forth, was already quite an interesting and large market. So, we saw ourselves as a pioneer in the Swiss market in order to first of all drive adoption, but then also to continue building new services, new products, and a new offering, and then help actually the mainstream average people in Switzerland to get access to crypto, but then also institutions at the later stage. So short answer is we were pretty busy actually with the Swiss market, but now thanks to regulatory clarity and new licenses that are available in regulatory environments where we definitely see the future, we also want to be positioned there, and for the first time actually in the history of the firm also grow outside of the Switzerland in an active way.
Yeah. And I'm curious how your clientele has changed, from the last 5 years or so into the last couple of years. Has there been a shift in the type of client that is coming to you and wanting to, get exposure to digital assets? Is it more traditional firms now? Is there high net worths? Has it always been kind of similar? Like how has the spectrum of types of clients that you guys are working with changed over the last couple of years?
It changed a lot. So 2013, when we started, there were no institutions, for example. So everything was like retail. So we started with retail clients, but then over time, and because we were doing KYC and AML since like 2014, our cost to serve clients were definitely higher than zero. And a lot of the large platforms that continued scaling internationally with no KYC, and you just needed the email address and the password to get an account there. So we had different regulatory requirements, and at one point we had to focus on, let's say, larger accounts and focus less on retail, because retail clients, let's face it, they were also well served at those platforms that were super scalable, and they also had a great offering, right? They were not regulated, but they had a good offering. So we focused more on the affluent accounts and then beyond. So retail clients that started in the early days became our high net and ultra high clients. But the typical client of Bitcoin Suisse is more like a crypto native. It's founders, co-founders developers, early investors of the large protocols, plus protocols themselves, the foundations and so forth. And those are the clients that also keep us as close as possible to the pulse and the real innovation of the industry. At the same time, by now, of course, we also opened up for like the more TradFi segments like family offices, external asset managers, bank, insurance companies, AMCs, and so forth.
Let's talk a bit more about Bitcoin generally.
Yeah.
The asset itself has changed. The industry around it has changed. We tend to say that it's become institutionalized in a certain sense.
Yeah.
I'm curious how your reaction to recent developments in Bitcoin has changed, in the sense that now we have derivatives products and we have Stretch and Michael Saylor is here, and it feels like when customers and new people approach the industry, they no longer look at Bitcoin, they think all the gains have already been gained. It's already appreciated to the extent that it will, and now it's nominal gains in this going forward. I'm going to look at something that's a little bit further down the risk curve. We had the whole meme coins, NFTs, all of these things. They ended up how high risk things tend to end up.
Yeah.
Things like Zcash are catching a little bit more of people's attention because they feel Bitcoin's been institutionalized. I want some of the original cypherpunk ethos in my asset, and it has privacy and quantum resistance. How do you reconcile with the trajectory that Bitcoin has gone in recent years and where the rest of the crypto assets are heading?
It's a very good question, and also here I probably could talk hours about it. But I mean, of course, it changed. It changed a lot. It migrated from this original kind of cypherpunk, almost anarchistic approach towards like being an institutional asset that again sovereign funds are buying into. That I mean, all the big asset and wealth managers are looking into. So that's a huge transition, of course. And when it comes to like the investment part of it, I always like to look at it in relative terms. And I had Bitcoin. I saw Bitcoin at like below $100, I saw it, of course, with the latest appreciations that it had. But it's always difficult to say now Bitcoin is expensive, right? I told friends, for example, of mine when I first started with the asset class, and then like a year later I said, why should I buy Bitcoin now at 1,000? It was like 100. And then like 1 year later it was 5,000. I said, now it's definitely too expensive. But I mean, if you could buy now Bitcoin for 5,000, great deal. So that's why it's relative. So the question is really, what are your alternatives, and how does the appreciation look like in a few years? And if you believe that Bitcoin has a higher value in 3 or 5 years from now, it's probably still a good investment to invest in it now. And then you mentioned all the altcoins down the risk curve, and that's usually the problem that most, especially retail investors, are doing. They try to do a shortcut. So they missed Bitcoin now, and it's anyway too expensive now, right? Which again is relative and very psychological. So they try to add more risk to their investment strategies, and then they usually do also a lot of mistakes. So they buy into something, or they invest too much in relative terms to their what they could afford. Then all of a sudden they're forced to sell again. So they buy high and then sell again at the low price because they need the liquidity. Those are common mistakes, right? But you need to, I mean, I also did those mistakes, but you need to learn from them and actually grow up and continue.
So who do you think is the next buyer? Like, we had kind of these major waves, a lot of cypherpunks in the early days, 2013 and such. And then, kind of the early enthusiasts. Now we have, institutional buyers. And then Saylor is, buying, quite a bit as a result of him raising for Stretch products and these things. Is it sovereigns? There's speculation. Patrick Witt has talked about a big announcement coming out around a strategic Bitcoin reserve in the United States. Yeah. Is it governments? Who do you think is the next buyer of Bitcoin?
I mean, let's look who is already in. So retail had its fair chance, and it will always continue to move along the adoption curve. Institutions are already in. Sovereigns are slowly stepping in. So the next big wave of adoption for me is governments. And at one point, it's a little bit game theory, right? If you don't really know what the others are doing, you don't want to be coming last to the table and then buy in at the highest prices. So I think that's the next wave. And if you look at Bitcoin and its characteristics, it's a completely decentralized asset. It's truly democratic. It's not controlled. It's not political. So on a sovereign balance sheet, it's actually perfect. And it's actually also the most not the most, but it's extremely uncorrelated towards all other asset classes, and it has an asymmetric kind of performance. So it's extremely interesting also from a portfolio management theory perspective.
Do you think Switzerland will or should build a strategic Bitcoin reserve?
I mean, that train has already left, so they bought MicroStrategy or like strategy shares, and I guess there's only one purpose to do that. So they're already on board of that. Plus, we always advocate at the General Assembly of the Swiss National Bank that they should at least prepare themselves. So I think it's a question of time. Others are more brave and faster moving, like in the Middle East, for example, but also I think Luxembourg the other day positioned itself. So early movers are there, and of course that's only the ones that made it public. There's a lot happening in the background. Some already have exposure to crypto because they seized some funds somewhere. Others were mining. Abu Dhabi, for example, since 2016, they're doing mining as well, which is quite impressive. And I guess I could imagine that a lot of governments are in the background piling it up without actually telling it.
Yeah. Andrej, I'm curious if any of your clients have been asking you about the latest underperformance of crypto relative to stocks or commodities. How do you answer that question?
I mean, that's exactly why we're here for. And also the asset management license is, of course, key for us because we also see our transition to go potentially beyond just crypto as an asset class. And it's a fair point. If you only focused on crypto the last 6, 9, 12 months, you missed out on a lot of opportunities. So for us, it's extremely important to provide options to our clients in terms of hedging strategies as well, treasury strategies, but then certainly also other asset classes. So we try to curate this in a way, thanks to the new license, of course, as well. But it's true. So if you're just focusing on crypto, you're missing out. But you need some sort of guidance, and a lot of our clients at the end of the day are crypto natives, and they exactly need this form of guidance.
Yeah. Well, Andrej, thanks so much for coming on. It's an absolute pleasure. You're a true OG. And
congrats on the licenses, man.
Absolutely, thank you so much. Yeah. Congrats on the license. What are you most looking forward to here in Bermuda?
I mean, it's amazing to be here, and it's a complete new geographic region, very strong on the insurance and reinsurance business side of things. I had no clue about it, but the number of people that I met from this industry in the last couple of days is just unbelievable. So I'm curious to learn more about that industry and to see how blockchain technology can also build the bridges into that industry. And then, of course, also offering access to a new asset class towards our clients, plus the density of extremely interesting people here on the island is also high, so I'm looking forward to further explore that.
Absolutely.
Grab a beer, go snorkeling maybe.
It's not just the beer here, they drink the Dark and Stormy. That's the local national drink.
And the rum Swizzlers.
Looking forward to that. Exactly, you know the drill. So.
I know. Ladies and gentlemen, the co-founder of Bitcoin Suisse, Andrej, Majcen. We'll be right back. We're going to pass it to our panels on the main stage. There's another amazing panel ongoing right now, and we'll be back with our next guest.
To a host of new risks and new opportunities, right? It's being redistributed and concentrated in unexpected areas, and I think it'll be a fantastic opportunity to watch risk continue to evolve and see how insurers react to it.
Yeah. And one, I think maybe just linking this to what Henson's company is doing at the moment, one solid proposition that they have is they try to keep it simple by actually solving the asset liability mismatch on their the part of the business model. So they actually offer the policy in the denomination in which the policyholder wants it. So maybe Henson, if you can tell the audience about where is the market demand strongest in this space, and what are the showstoppers out there for the capacity to actually scale up? What has to improve? What has to happen maybe in the sector?
Yeah, I'll just briefly talk. We underwrite in fiat, Bitcoin, and Ethereum at this point. Certainly the advent in the US of staked Ethereum ETFs, with the ETF providers needing some sort of indemnification or insurance for a quick drawdown. In NAV versus the basket they're trying to match, we've seen an increase in demand for Ethereum-denominated slashing insurance. And then just looking back to the FTX debacle, people got their money back, but it was after crypto, broadly speaking, had gone up 4 or 5x. And so they got sort of the mark to market on the dollars plus some interest from their losses. And so us denominating crime and specie insurance in Bitcoin when custodians are holding a bunch of Bitcoin is a much better asset liability match. And we're seeing demand around crime insurance denominated in Bitcoin for crypto operators as a result.
And by the way, just to keep it clear, FTX, which was not licensed in Bermuda, it was licensed elsewhere. So I have to make it clear.
The other B,
the
not on
other
your
B.
B.
Don't confuse that with the other B. So I just want to make it clear. They wouldn't have gotten the license if they came here. But it's so I had to make that point just to make it clear. But Rick, I want to turn to you maybe from the institutional asset management side of things. What risks out there on the capital investor market where you think maybe the insurance can come in and so sort of help address those risks from an insurance point of view?
Yeah, and I'll lean on my colleagues for their thoughts on that. But I think, when you think about smart contract risk, I think that's something ripe for disruption in your industry of how we look at it. We have a suitability framework that we hold very high regard in-house, and even with our regulators, it's in our prospectus of each network that we choose, there has to be strict, rigorous pieces in place before we even decide to build on these networks. So I think using that kind of framework, I think there's a lot of different things that you guys can take from just how we view blockchains and how we view why we decide to build on these blockchains, and how you can maybe look into incorporating some type of insurance, dynamic for each of these blockchain networks. Because as we see over the last 3-4 weeks, there have been some pretty significant hacks in a different kind of landscape versus these networks. But I think there's a lot of lessons we have seen and can learn from these exploits as it relates to de-risking and risk transfer. So we have a lot of different businesses within Franklin Templeton that we're constantly navigating from the traditional side to digital asset side. So I think I'd love to hear from my colleagues on the panel what they would think would be something that we'd want to.
So maybe what I can do is that because they're asking us that it's over, we're kind of over time. So I want to merge that with your final remarks, maybe just to close the panel. So maybe what kind of risks will insurance be able to actually help address in this digital asset ecosystem, and maybe couple that with what would need to have happened in 5 years for us to actually say that insurance has now become a critical part of a strategic business model of any company. So I don't know, maybe Joe, you want to start?
Sure. I would say 5 years from now, we should not be referring to it as crypto insurance. It should be just digitally native risk architecture. And I think if that's the construct within which we're operating, I think that will be a huge step in the right direction.
100% agreed. I think it's the kind of adoption of the infrastructure from a full compliant on-chain, KML, AYC capital coming to a growing marketplace, which is crying out for more efficiencies and to offer diversified yield to a new breed of investors and also existing investors using the technology to access the space more efficiently. Then that's where we should be in 5 years.
Awesome. Henson?
So the diversification was sort of the one-word answer I was thinking of when I read your question. We do still have this nature of the risk of there being a set of master keys or an omnibus wallet where all the assets are gone. And I think in the tech design, wallet providers have to figure out how there can be diversification amongst wallets to segregate the risk so that when you're writing one-off insurance that an event just doesn't seize all the assets.
Great point. Rick?
Yeah, and I'll just keep it super clean. 5 years from now, we're not talking about blockchain anymore. It works the same way you drive a car every single day. Blockchain is going to be a facet of everyone's daily routine. They're just not going to be thinking of it as this nascent technology anymore, and it's not going to be on the tip of our tongues. So I'll use that as blockchain is going to be fueled in your world, and it's going to be continuing to be fueled in our worlds, and we're not even going to think about it anymore.
And insurance is embedded as part of it.
Exactly, yeah, insurance is embedded in all that. So that's how I think we should be in the next 5 years of
Great.
Not having to think about that.
Fantastic takeaway. So thank you so much for staying with us and enjoy the rest of the forum. Thank you.
Awesome. Thank you.
All right, very quickly. No, I'm keeping you from our beautiful reception at 1609, but thank you everybody for coming out to day one of the Bermuda Digital Finance Forum. We'll continue tomorrow with content in this room in the morning, and then in the afternoon we have a series of roundtables that are going to take place through the Trudeau Ballroom, which is on the other side of the hallway when you exit the back here of Harborview. So if you haven't signed up for one of those roundtables or two of those roundtables in the afternoon, you can do so via the Luma links that have been shared on the main Luma invite. And right now, everybody head over to 1609, the beautiful restaurant right on the corner on the water out there. We're going to have our evening reception for tonight. It's going to be a beautiful night. The rain has stopped for the time being. I don't want to promise that it'll stop for the whole time, but you'll be indoors at 1609. So we're going to have a great night. Thanks again for coming out to day one of the Bermuda Digital Finance Forum. We'll see you soon.
And with that, day one of the Bermuda Digital Finance Forum has concluded. Be sure to join us tomorrow for day two, packed with more insightful sessions. But until then, join us over at 1609 for tonight's evening reception.
Alrighty, guys. Welcome back to the Rollup. We are live here at the Bermuda Digital Finance Forum, day one. We're here with Arjun, Sethi, the co-CEO of Kraken and Payword. Arjun, how's Bermuda treating you?
It's good. Actually, this is my first trip here to Bermuda, and it was bumpy on the way in, so I can see how people can get lost, in the rocks or Bermuda Triangle, whatever it might be. But it's pretty beautiful, so I have to admit.
Yeah, very, very cool. There's lots of great people here. We've talked to a lot of people that are focused on regulation, Clarity Act.
Talked to your institutional lead as well about the news with Franklin Templeton.
Yeah. How was that? I stepped out because Sandy and he was here.
Yeah, you guys are obviously moving forward, bringing all different types of assets on chain. You guys have had a hell of a run the last couple of years. Arjun, it's your first time on the show, man. I was just telling you that, Rob and I were trading in the University of Florida library on Kraken in 2017.
And I heard you guys got wrecked.
Yeah, we did. By Arthur Hayes. I don't know why I ever took my money from Kraken to BitMEX. That was the first mistake.
That was the beginning.
And got debanked. And so Operation Choke Point, caught another one, unfortunately.
Yeah.
You said you were also part of it? You also got caught up in that?
I was debanked by FRB and SVB. We had started a crypto fund. Obviously, they didn't tell you why you were being debanked, but that was part of the process. And,
no, you just got the letter in the mail. Yeah.
Well, I didn't get the letter in the mail. I got the phone call saying, hey, we got to turn off your account. And then you would ask why. And they said, we can't really talk about it because there's some KYC, AML issues. And I'm like, okay, well, what does that mean? And then it just gets lost in the ether.
And so the entire industry has come a long way. Like we've overcome so much, Operation Choke Point, the Gary Gensler era. Now it feels like the resurgence of public markets are coming around. Larger crypto fundraisers as well. You've been, at the center of this. Kraken has been at the center of this. I'm just curious if maybe, you can, talk a little bit about the transition from what we were facing as an industry, even just 5 years ago to now. What do you think have been some of the most significant changes that have allowed companies like Kraken to flourish?
I think one thing that gets lost is that most people look at crypto just from a US lens. And I think it's important to take a step back and remember globally it's being adopted. So we talk about early adopters, mass adoption. We talk about BTC to ETH to altcoins, stablecoins, tokenized equities, commodities, so on and so forth. And I think probably what has made the industry more successful is that you've just had global mass adoption in a permissionless way. Where in a lot of the what you call rest of world markets, some people call it gray markets, unregulated markets. That's not true. They are regulated. It's just that the regulations allow you to be able to build, access, create foundations, create any of these products for people in the crypto ecosystem. And then over time, you've seen people create a lot of unique products, including perpetuals, which is I think something that gets missed because we've moved on to prediction markets as quickly as possible. So I think for companies like Kraken or Coinbase, started in the United States, took a regulated path. And regulated path doesn't mean like the right path or the wrong path. It just started in the United States. And so the natural inclination was let's regulate ourselves and let's be good stewards and then expand. But some companies only stayed within the United States. Some companies went into other regulated markets. What we did is we went global right off the bat. Europe being sort of our actually first market and then coming back to the United States over the last 15 years. And that's actually what's helped us become more and more successful because each market that we went with any of our products across consumer or professional traders or institutions, we were able to test that out in any of these global markets, see what worked, get adoption, then bring it back and forth depending on which constituent or jurisdiction mattered.
Yeah. I mean, Kraken started as a place to trade crypto as an exchange. It's since grown massively into what I kind of think of almost like a prime brokerage on-chain, off-chain tokenization platform. There's so many product lines. I'm curious when you were starting Kraken, what was your original vision for what this crypto landscape would be and what this Kraken company could be? And just kind of take us through this evolution here of the developments. Kind of a lot of these things are path dependencies, right? Where certain events happen that are out of your control that dictate your product strategy or dictate your expansion strategy. Kind of just walk us through the evolution of this company as you started from a very small kind of grassroots company into now a very large organization.
Yeah, so just to clarify, I didn't start the company, but I was an early investor and believer. So the two co-founders, Jesse Powell and Ton Lu, started the company around 2011. And they had started the company based off of the premise of what they had seen with Mt. Gox. So if you've been in the industry long enough, you know that Mt. Gox got hacked. Not just once, but a couple times. And so Jesse was a part of some of the folks that went to help figure out how to fix Mt. Gox and make sure this type of stuff didn't happen before. He actually then decided to come back and start a regulated exchange. But what was more important was that it was an exchange where it was regulated, privacy and security from day one. And then also just making sure like there was a matching engine that like made sense, an order book that made sense, and it was transparent, just like you would see in any traditional market. That's how the company started. And so you create an exchange, and obviously BTC and then ETH. amongst other assets over a period of time. I think what was more important was his background and coming from gaming, but then also moving directly into professional trading, was how do you build a product for professional traders? And professional traders they want smart execution, they want transparency, they don't want to be front run, they want to be making sure that they are trading at the same level of any institution is trading. So it's not that someone gets a subsidy or a kickback, which is what you've seen in a lot of exchanges. And so we stayed what we call fair right from day one. And so that was actually how we started as an exchange. Then we built the infrastructure on top of the exchange. We added more onboarding and offboarding. We went more global. And then we added more and more products because our professional traders were demanding that. They're the most price sensitive people on earth, right? Because they want cheaper costs. They don't want the transaction fees. They also want access to leverage in some cases. They want collateral efficiency. So we kept building out these products. And so then we actually evolved in two different directions at the same time. One was how do we cater to institutions, so the algorithmic folks, the high frequency folks, et cetera. Then we went consumer, which is, okay, great, all of the products that we built for professional traders, how do we simplify those products and give it out to consumer and retail folks all over the world? But professional traders are not in one jurisdiction, they were global. So then we got licensed in Europe first over a period of time. I think we were one of the first exchanges to get MiCA authorized through CBI. We got our MiFID license through Cyprus to be able to cater to all types of products and services in Europe. Then we did the same thing in Canada, Australia, now in the United States. So the reason I say that is we're going market to market, jurisdiction to jurisdiction, capital markets licenses, money transmitter licenses. So too much detail could be boring. The whole point here is regulatory stack, infrastructure stack, exchange stack. You can think of us as building interactive brokers, a banking and financial services product, an exchange like NASDAQ all in one stack. And then we have different products or interfaces is what we call it. So Kraken Consumer, Kraken Pro, NinjaTrader after we acquired them last year are all interfaces that hook into the exchange as first-party applications. And that was the story. And then we elevated Payward as our brand, which is what the company had always been, to say, okay, great, we've built out the infrastructure in order to support our first-party applications, and now we're going to use that same infrastructure and microservices that we created in order to enable fintech apps, algorithmic traders, anyone who wants to build permissionlessly over time anywhere in the world, trading as a service, trading service in a box, onboarding and offboarding, card issuance now, treasury management with the newest acquisition of Reap.
Yeah.
And so the more of the stack we continue to build, the more liquidity we build, the more custody, staking, and lending we can offer to not just ourselves and our customers, but everyone. And we can let people build permissionlessly everywhere. So that's been the story and the arc and what we've been building towards.
I want to mention just a couple of the things in the regulatory stack that are in addition to this MiCA license that you talked about early on. One of the stewards there. I also saw the Skinny Fed Master account.
Mm-hmm.
This is part of the U.S. stack. This was a big announcement as sort of a working group thing that they theorized. You guys came in and made it practical. I think there's also a bank charter, floating around out there as well, which also adds to the comprehensiveness of this regulatory stack in the U.S. in particular. And then you mentioned how the grand vision here is that you have all of these interfaces that hook into the primary exchange, and you have regulation interfaces that provide the fairness and protection around these interfaces and the exchange itself.
Well, the interfaces are how we interact with the customer.
Mm-hmm.
And then a certain set of those customers also provide liquidity to us, or we provide liquidity back to them. But I think what's more important is that, our regulatory and infrastructure stack is embedded so that we can serve clients for the products that they're looking for. So for example, we just recently launched spot margin in the United States. It's always been available in other markets, but a week ago we launched that. And the reason we launched it was because we also acquired Binomial. So we have the necessary FCM, DCM, and DCO in order to be able to provide these services to our customers, regardless of who they are, from an institutional to a pro trader, to an accredited investor or equivalent for a CFTC or commodity style trader, all the way down to a retail margin trader if they want to use any of these products, regardless of the asset class. And I think that's important too, multi-product, multi-asset. So we say crypto, we think BTC, ETH, altcoins, meme coins, but tokenized equities is a large part of that. And then over time, we're going to do equity perps, akin to how people think about single stock futures, but we're going to focus on perpetuals.
Yeah. Curious because it feels particularly relevant today. Anthropic came out and said, hey, a lot of these secondary SPV vehicles aren't really shares. I think the price on chain dropped 24% or so. Obviously, these things are still, they're still at their fair market value when it comes to the actual shares. How do you think the subset of the industry of tokenized equities, how do you think that is going to progress? What is your tokenization mindset when it comes to these high quality assets like equities?
So not all equities are high quality. Not all of them are assets that you want to buy. And so since the late 1800s, 95 to 98% of equities that have ever been created are zero or don't exist today. And so you can make the same argument about meme coins and the half-lives and what you should be investing in or whatnot. So we're not going to give investment advice, but I think it's always important to understand the context and history of an asset within an asset class and how long they last. In terms of equities, even in the public markets and private markets, there's something that you call power law. Right, in the public markets, we call them the Mag 7 or the Mag 8 or whatever the numbers are going to be in the future, or the Mag 1, who knows, with the AI companies, it might be like in a league of their own. I think what's important is between the public and private markets, how do you deliver access to people worldwide, which is the promise of crypto in the first place? How do you give them access to be able to get access to these assets? Now, once you have access, what do you do with that? Well, in the United States, we're used to being able to borrow against it or store it or lend it out, etc. So you want to be able to make those products available freely, either through DeFi or through the exchange, or vertically integrated together, depending on how you think about the layer 1 and the layer 2s that are out there. Like, we're in the really early innings. So when I say all these things, that I don't mean to use like flavorful bombs of just random flavor of the week of a word, but it's more that we're trying to figure out what this will look like in terms of access to capital and then access to debt on behalf of those assets. So it could be anything, right? Gold. We announced the Franklin Templeton tokenized gold ETF today. Great. Well, what are the next set of 10, 50, 100 that are going to be out there that people want access to here in Bermuda, Latin America, Africa, Asia, etc. And then how do you use that as collateral to do something? So you go from speculators, traders, investors, savers, risk managers. They all have a different value set around what they care about. But if you're on one collateral system or have the ability to settle immediately, no matter what the asset is, then you actually can just make better, what I call risk management asset decisions. And that's just something that we haven't seen before. Usually the ones that can do that are the Citadels and the Jane Streets of the world. They're not bad guys. They just were smart about creating infrastructure to do it. Now, what happens when you can give that to all three of us, just sitting around? And then what happens when you have AI agents with their own sub accounts, when their own stablecoin accounts or their own credit accounts, et cetera? The world looks super interesting at that moment.
Yeah, and I'm glad that you brought that up, because I know that you have some of these recent acquisitions on the stablecoin side, on some of the infrastructure side, to kind of beef up the broader product strategy here. Recently, we saw one of your competitors, Coinbase, lay off about 14%, I think, of their employees, citing AI-related claims with regards to trying to improve productivity. You were also at NearCon back in San Francisco in February, and I'm just curious kind of how you're thinking about the growing use of AI internally with your team at Kraken, as well as building off that, the convergence of crypto and AI at large. We saw a lot of talk as of late around a product called Venice from Eric Voorhees. Obviously, Near is doing a lot of work here.
That's right.
How are you thinking about using AI in your company? And then what is your kind of broader holistic view on the convergence of crypto and AI?
Yeah, so there's multiple questions there, so I'll try to tackle them one at a time. One is, I think there's this predominant feeling that AI, anything, you're going to lose jobs. And I think that's an incorrect way of looking at it. So let's just take a step back on even what you've seen with OpenClaw or any of the other products that are out there, which I think is just really exciting. You as an individual, if you use Cloud Code with sub-agents, they have their own, or use OpenClaw, what are you able to do? You're able to do something that is what you would have to hire a team of 10 people to do, 100 people to do, or 1,000 people to do. And in some cases, if you're really good at this, and I'm going to try as hard as possible, is what if you had an army of 1 million people working for you? Okay, well, imagine if you arm the 3,000 or 4,000 plus people at your company to do the same thing. I think one thing that people get scared about is okay, well, what happens if, and I have this conversation internally all the time, you think about Karpathy's second brain and what he's been talking about. Well, we implemented that, 3 months ago, then another 3 weeks ago, and you throw away some stuff and you put it back into place. How do you enable everyone at the company to be able to have access to the same information? Frankly, like the CEO does, to be able to make decisions. If you make an entry point person at the company just as smart and contextual, actually not smart because I don't know if I'm smart or not, but let's just say has access to all the information or context of the company, how much better of a job will they be able to do because they can just train themselves along the way? Now imagine if they have 10, 100, 1,000, a million agents helping them along the way, which is where the world is going to go no matter what. Like it's a foregone conclusion. So can you be more efficient? Absolutely. But can you do more things? 100%. And so I think what you're seeing in the market today, because there's headlines around it, is that there are certain things these companies have done over the last, let's call it 10 years or 20 years. They're actually companies that have built off of technical capabilities or infrastructure that have a little bit more debt and that they're older. So what do they need to do in order to be able to adapt to the times or to be able to build at a high frequency or have someone who has like a team of 3 people of engineers and have like 10, again, 100,000 agents to work on their behalf to code and get things out from continuous deployment to deployment into production. It's just it's a different muscle that you're building out. And so I think what you're seeing is that you are shedding some jobs in order to hire in another area. And then there's some workflow automation that was happening without AI regardless, which is manual things that people were doing. And then can you empower those same people to do more things? And if they are willing to adopt AI, which you don't see a lot of times, sometimes people say, what, I just don't want to do it. It's kind of like asking, legal and compliance or finance ops or even BD salespeople to use Salesforce or to use Slack or to use any of these systems. And a lot of people didn't adapt. Right? It's kind of like asking, hey, should you like write things down on paper pencil for your grid, or do you want to use Excel sheet? And a lot of people didn't want to use Excel. So I think there's always this fear of using technology is cheating, or that you're going to have brain rot, or you're not going to be smart. And I think you just have to continue to educate people to say, hey, it's okay along the way that you're getting help, because that means you can refine it. You can have AI still come up with crap if you are thinking about something in like in a non-quality way. If you think high quality and you have help along the way, then ideally the outcome is high quality. That goes for every function in the company. And so I think a lot of people are having the identity crisis. If you don't have the identity crisis and you're going full throttle in, I think what you're seeing is people just get a lot more creative, and those companies are just moving at a faster pace. I don't know where we benchmark, but it is like a P0 for us internally that you have to use this. And if you don't, you won't have a job at our company in the future. Not because we're automating you out, but because you're not adapting to the future of what it would look like for our company to be successful. That's internal. Externally, the more you know about what you need to build, you can build this on behalf of your clients. So I want all of my professional traders, I want all my consumers to be able to have access to as many agents as possible. I want them to be able to have access to as many yield opportunities and products as possible, without them having to try to figure out how to understand the complexities of smart trading or algorithmic trading, or smart order routing. Like these or like what's a limit order? Like sometimes these things are actually easy for someone who's been educated. But imagine educating them along the way with help along the way. If you have teachers along the way, however you want to define it, co-pilot or not, or completely automated or not, I would love to just put all my money, which is what I'm going to do, just through these systems and say, okay, agents go wild, because I trust them more than I trust these intermediaries and people along the way. And I think like with crypto, with AI agents, workflow, whatever it may look like in the future, that is definitely a mission worth fighting for, because we just haven't seen that before. And I don't think you're going to have traditional financial apps or traditional banking companies actually try to adopt that. If they do, I think they'll be successful. And so we're just going to be at the forefront of pushing this as much as possible.
An observation is that the organizational structure of Kraken sounds very similar to the product structure, in the sense that you've given everyone in the company a context window into everything that's happening at the company.
We're on our way there. I wouldn't say that we're 100% there.
That's the vision. That's the vision.
That's right. Yeah.
And similarly, you've got this product suite with all these interfaces into the full context of the liquidity across all of these different platforms.
Mm-hmm.
Everything's segmented, regulated as it should be, but you've got signal and liquidity baked in across several different products that gives an entire suite of context. Just very similar to the second brain concept that you mentioned.
Mm-hmm.
This, I think, is the epitome of the financial super app thesis, I'm curious if this was a deliberate decision to build the product and the organization in this way where, you know, you see something through a lens, but you see everything through that lens. That way everything is being shared and we have the full context, no matter what lens that we're looking at it through. Was this a deliberate decision? If so, how do you think this helps build a better, more efficient system when it comes to product as well as organization?
It's a great question. So one of the other hats that I wear is on the asset management side. So I started a firm called Tribe Capital. And then when the Tribe Capital, the value proposition was like, can you use data to make better decisions? What it ended up happening was that we use data to make sure we don't make bad decisions, right? So how do you say no more properly? And then how do you say yes when you need to? So we had come up with our own quantitative framework for product market fit, which is, does the company and its product work or not? If the answer is yes, then you dig deeper. If the answer is no, there's no point to dig into finding out if we should make the investment or not. It's just a no. So that's a capital allocation strategy. When you're at a company, especially as an executive or people that are leading the company, what are you doing? You're allocating capital. You're also allocating human capital and then processes. It's no different. So you need to be pretty surgical about how you're quantifying product market fit. That's essentially the first thing that I did when I came into the company was this is how I view the world. By the way, now I view this world this way, but I have access to a ton of data, and so I'm able to benchmark company after company rather than like remembering it. Okay, so what does a typical VC do if you've interviewed them? They meet with a company kind of like this, and they say like, I look into your eyes and, all right, guys, let's do this. Well, in reality, that might work 1 out of 100 times. I don't like making those types of bets. And so for me, it was like, great, well, let's meet. Let's like take a look at all the data, quantify surgically, like, are you a company that works or not? And then I can get to know you and see like what you want your vision to be based off of that foundation and baseline. And then we can add capital and talent and whatever help you want in order to succeed. That worked out pretty well for us. So we said, okay, well, how do I do that across the board for what we're thinking about in the financial services space? Because what are we building at the end of the day? We're building out infrastructure, we're building out distribution, we're building out engagement, and we're building out product interfaces. So it wasn't a super app theory. What we said is, okay, you want to have infrastructure to be able to build specific, what we call first-party applications internally. But what is Facebook at the end of the day if it's not like a unified risk engine for advertisements and retargeting? Is Instagram has data and engagement, Facebook has data and engagement. Obviously, they monetize there. But WhatsApp has a very minimal monetization, but high amount of engagement and usage and distribution. But those are product interfaces that all relay data back. You can call it data liquidity if you want to, and then they're able to monetize off of that. We do the same thing, which is like we've got folks that are depositing capital, but like that interface is going to be just different. They're not looking to trade or speculate. They just want to deposit their fiat, or they want to deposit their stable coins, BTC, tokenized equity, so on and so forth. That could be an institution. It could be an RIA. It could be just a wealthy individual. So they think about the world in a very specific way, depending on where they're located too. Then there's just, professional traders, as I mentioned before, arbitrage. They're looking for smart ways in which to be able to trade, and they want to speculate. They want to gamble. They want to go YOLO sometimes. They want to be able to use margin. They might want to use leverage somewhere else. Great. There's product and services and interface specifically to that. The reason I say these as examples is that you can't Frankenstein this all into one application. Why? If you take a look at all the apps you've ever used, if you don't like an interface, you leave, you churn, and you look for an interface that's better for you. You trust it more because you believe that you know what they want on your behalf. They have more data about you. They might have a better way in which to swipe. It doesn't matter. Like there's always these unique value propositions. So you move your capital. And so I think like that's where everyone's kind of gotten stuck, which is we've gone from a world post-World War II where everything was at the bank retail location. Over time, we've bifurcated it. And it's weird to me that somehow in the digital world, we're going to have everything munged into one. From an infrastructure level, totally get it. That's what AWS does. But to have it all in one interface, I just think makes no sense because if you're thinking globally, if you're in Argentina and you are starting off your life with stablecoins, you're not thinking about speculating, right? Like commodities. You might over time, if you grow and you accrue value and you have forward mobility, great. But then there's a certain level of people like we call it mid-market or enterprise that may want to do that. But you go jurisdiction and country by country, and then you look at the products that you offer, it cannot be the same and it cannot be Frankenstein. So in order to be able to think in that direction, Bill Gurley has this really good line called like, you gotta play the game on the field. It's like, well, the game on the field are our customers, and there's a specific value prop of what they care about. We have to build experiences for them. And then we walk backwards, which is, okay, what's the tech, infra, exchange that we may or may not need? And then what is the regulatory stack that we need? What's the onboarding and offboarding? And then who are all the bank partners we need in order to service that customer? And in some markets, that's a huge stack. And in some markets, it's about half the stack.
You know, on this kind of comparing the culture of the org versus the product and kind of thinking about these things in this lens, you know, I'm curious in the current state of the company, right? The private company versus where you guys are headed in this public setting, given the expansion of the product and, as you mentioned, this kind of focus on employee agency, or at least this ability to kind of really shape your own destiny with these tools internally. How much do you expect your company's culture to change after you go public? And what will you do to preserve the startup kind of vibe amidst a more scrutinous regulatory path ahead? How do you keep employee agency, keep the kind of early stage, ethos-driven company in a more public setting going forward?
I think first and foremost, it just comes down to your cultural values. And so you can make any statement you want on a website. But it doesn't mean you live to it, and it doesn't mean you have virtues and values around it. I think Ben Horowitz has like a really good book, which is like, do you live and imbue those values of what you write, or do you just write it on like a tombstone and you forget about it? And so part of what we've done, and we made mistakes along the way. We have for us to say we were perfect the whole way. Like I see these podcasts of other founders or executives that say we kept our culture the same the whole way. I just think it's total bullshit, because of course it evolved. And so did it evolve for the better, or did it get worse, especially as you get larger? And so there's a lot of books around this. There's a great book called Loonshots. I actually just sent it to my COO yesterday because he was going through what I call penny pinching for everything. And I was like, dude, just read this book, please. And then use that framework, and let's have the conversation again around like, where do we want to innovate? Where do we want to try things? Where are we okay to fail, learn from it, and then try again somewhere else? And so those are hard things. We're not going to be perfect. We're not always going to be great at something, but you can learn and iterate and iterate. And I think for us, one, we call ourselves payward pirates. And so I think pirate has a meaning. Some people think of it as a nefarious attitude. Steve Jobs thought of it as like, this is how you think about, building great products. Or you could be like the Navy or like the Redcoats and like lose the war, like in the American Revolution or the rebellion, depending on where you're located. Yeah. and that's always going to ebb and flow for us. And then each team, each interface, if it's infrastructure or microservices, they all have different things on the line. And so there's different, definitions of what innovation means for those people. And so, look, between myself and Dave, who are the two co-CEOs, we've got roughly about 75 to 80 reports any given month. And I think that we'll either keep it that way or add it, because we have different products and services that we're building. And some of those things we know won't work, but we're going to try anyways. We're going to invest. And then return on invested capital might be zero. However, we might have learned a lot in terms of how we want to do it the next time. So if you actually look at any of our products that we've built, or that we bought, or that we've rolled out, regardless if it's yield, we've tried it in some capacity in the first place. And we've tried it in some market, and we've seen what the results were. And a lot of times we've come back and said, hey, we have no expertise here. We got to buy it. And I think that's a better way of thinking about how you want to build out your culture in maybe a more authentic and honest way, not to shareholders externally, but to everyone internally, to say, look, guys, I need everyone to help us think about getting to this next North Star, or KPIs for our total North Star. And I think like people at the company have come a long way. We have I'm pretty proud of it. We have like a bounty system. We have something called a LFG reward, which basically stands for Let's Fucking Go reward. Essentially, like if you come up with something that's really innovative for the company and we adopt it, then that's a performance grant. And these performance grants are actually quite high. In some cases, my hope is that they get paid more than any of the executives do on a yearly basis, because they're coming up with the ideas. And so ideally, it's a merit-based system and an ideas-based system that are the best that like surface to the top. And those are the people, I think even more importantly, that are leading the initiatives at the company, are leaders at the company. And we're building the organization bottoms up, leaders from within, versus saying, I got to get someone from the outside, got to get a resume. Most of the talent exists internally at the company.
Yeah. So there's a kind of saying that, you as a person, you have to become the person able to manage millions of dollars, able to manage thousands of people. You have to be the person in order to be in that role,
Mhm.
right? And it's kind of like as much of a personal development as an entrepreneur as it is like building a company and building a good product and building, a service that people want to buy and being able to really like articulate that. We talked about like the culture and the way that you're building this company. What about yourself? Like, what kind of actual changes have you made to your personal life, to yourself as an individual, that has allowed you to be the co-CEO of a soon-to-be, multi-billion-dollar valued public company? What does some of this personal evolution look like from your habits, from your rituals, from kind of your actions? How have you become the person who deserves to be in this position?
Yeah. So to the last line, I think deserving to be in the position, that's a hard one. I don't know if I deserve it. I think it's just, there's a combination of luck, there's a combination of skill, there's a combination of timing, there's a combination of trust with the folks that you have around the table. And then there's also that internally at Payward, we probably have not a diversity of thought. We're actually just very focused on a very singular mode of thought, which is like, this is what we want to do, this is what we want to achieve. And I think like that means that culturally, how we think about running ourselves is we're running hard all the time. We're not in a place where we think about work-life balance. We think about work-life harmony, and we state that very, very publicly, which is like, this is the expectations of people that are at an executive level, director level, and that's not always easy to digest, right? Like a lot of people that say, I want a work-life balance, we're not the place. So we actually have these programs that I think are really important that we set up over the last 2 years, which is like, we'll help you sail away from Payward, which is that if this is not the place for you in the first, like, even 3 months, 6 months, or a year, we'll help you find a job, and like Payward's not the right place, because we want to make sure that everyone that's there is giving more than 100%, giving more than what you would typically do, because the mission of what we're trying to do is really important. Now that might sound crazy, but I think like you got to have a certain amount of fundamentalism in that direction of what we're trying to do with crypto, access to capital, open global financial rails, global permissionless innovation, in order to like really push those things, work with the regulator, work within these ecosystems. I just think it takes a different mindset. And it's not an easy ride the way in which typical Silicon Valley companies have seen. And we're not a Silicon Valley company, right? We've been global remote since day one. We barely raised any capital until last year. So I think it takes like a different style and attitude. For me personally, honestly, I don't know how to answer that question outside of, I've been just doing this for so long, I don't really have any other mode. And so a lot of people say like, are you a peacetime leader or a wartime leader? I've always been in wartime, so I just don't know any other mode. But for me, it's fun. It's not stressful. I like it. I'm learning something. I'm learning when I'm dumb. I'm learning when I make mistakes. And then if you can continue to iterate from those learnings, then ideally you can pass it on to other folks. At the same time, I also know what my limitations are, and then I know the types of people that I want to have around the table, what their expertises are, and how to bring them along the way, and also just give them the ability to run. But at the same time, let them know that I'm going to micromanage the hell out of them as much as possible, because that's how I work. But that's the same as how our co-CEO works. It's the same as how Jesse and Ton work. Jesse is like a huge micromanager. There's probably a day that doesn't go by, given he's the chairman of the board, that we're not in constant communication about something that's happening at the company, which is rare, right? It's not like every quarter the board is coming around and talking to each other and doing, let's come to the principal's office and give a report. We're extremely integrated, which is like, here's how we think about risk management. Here's how we think about our products. Here's what we're doing on the political spectrum. Here's how we're thinking about supporting new initiatives in new markets. Here's how we think about a regulator. I mean, like the list just goes on, where we want to have as many people participate in that, no matter where they are in the chain. And then the better that they do, the more that we want to elevate them. So our CFO, internal, our COO, internal, actually was what we call a boomerang. He came back. Our co-CEO was the CEO, but he's still there at the company. I'm a co-CEO, but I've been on the board for 5+ years, an investor and shareholder for a long time. So we like to make the argument. I don't know how true it is or not, but I wasn't external, I was internal, and I just came into the company because I was asked to come into the company. So there's no coup. Jesse and Ton are both active. They're still at the company. There's no change. And so the company hasn't really changed DNA too much. And I think what's more important is everyone has the same mission and value sets that they really care about. And so we've changed our personal life in order to adhere to that. So you can call us chameleons, or we've changed our lives in order to meet that goal. But I mean, Payward is just something that I wake up with and dream about and go to sleep with and then wake up again in the morning. Like there's no change.
I love the distinction between harmony and balance. Harmony to me is a sense of 1 + 1 is 3. You find work-life harmony. You end up better at both. Whereas you can achieve 1 and 1 being 2 in a balanced format, but ultimately you re-energize, rejuvenate as a result of working on the one, and they end up harmonizing together and both are.
I'll give you an example of that. And I think some people used to think it's weird when I used to raise capital, at Tribe Capital or limited partners, is I would just take my kids with me. Like if I didn't have time, I would say, you guys just want to like go on this trip. So I've taken them all over the world. I've taken them to the F1 races for our sponsorship partnerships. I've taken them to meet with regulators. I've taken them to the White House because I had nothing else to do. Like I didn't want to leave them at home. I didn't want to leave them at a babysitter. I just wanted them to go. And so I think in the beginning they thought, Dad, this is like the most boring thing possible. My oldest is 14. My youngest is not now 9. But now it's like a part of their workflow, right? Like they know all the people I work with. They joke around with them. They have the same lingo. And I don't know if it's going to be a good or bad for them. It doesn't really matter to me. It's just that they are part of that workflow. And the work-life harmony, the statement, it's a Bezos statement actually. Like I'm not coming up with new stuff. I'm just like reading as much as possible and infusing it. These are, I don't think these are novel approaches. It's more about like, how do you use it in your everyday versus just, making a statement that you think you use it.
And those experiences are entirely up to them. What it is, what they make it. We talked a lot about the intangibles and the culture of the company and how this might change as it goes public, you personally, as well as the organization as a whole. I'm just curious, in these few minutes here, what are the incentives? You mentioned how internally you have this performance grant, if you will, this, idea-based, bonus. And that could help to promote that attitude internally to the company. There's a lot of companies out there that have chosen not to go public. They're really valuable companies. You can rattle off the list, but look, a lot of the largest private companies now are bigger than a lot of the public companies that are out there now. What is the incentive to go public?
So I think the reason why, I'm going to put my Tribe Capital investor hat on. The reason why people have been wanting to go public are sort of a plethora of reasons. One is the quarterly disclosures and the amount of money it takes in order to be able to be a public company in the first place, right? Sarbanes-Oxley's, post 2008, all the rules and regulations that I don't want to say created friction, but created enough costs in the on the way to go public that just makes it harder. And so what do? They said, okay, instead of being at 50 million in revenue or ARR, let's go wait till 100. Then over time, it was from 100 to 250, 500, now even $1 billion, right? And so even companies like us, right, like 2 billion plus in revenue, we've chosen to stay private for as long as we have. And frankly, we didn't even need to raise capital. So we actually had more of a dictation to decide what we wanted to do. You have companies like Stripe that have said that they'll never go public. And you've had companies like SpaceX that have said we'll never go public, but now have decided to go the other route. I think at the end of the day, the real answer becomes you want access to capital is one of and access to debt capital markets for your company. I think for financial services companies, it becomes really important for them. In addition to that, if you're a regulated entity and you gotta give your audited statements and financials to other regulators all over the world, it's better to be a public company, in my opinion, to be able to again then have access to more capital and debt markets and expand and grow in those markets. So I don't think being a public company is for everyone, depending on, it's your company at the end of the day if you're private and how much you own of it. And so our aspiration has been who are our clients and how do we serve them and what do we need to do on behalf of them and what are all the products that we have. And then along that way, in that journey, if we decide to become public, then we will. If we decide not to, then we won't. And it's going to really depend on what do we want to have in terms of the products and services and offerings for our customers in any of these jurisdictions globally.
Yeah. And then with a huge decision like this, I'm just curious if you have a decision-making framework that you optimize around, even for a choice as big as this, do we go public or not? Or what do I eat for lunch? what is your general decision-making framework as the co-CEO of Kraken?
So let's do the personal one first, and let's talk about food. So everyone thinks about regret minimization, but the problem with that is, I drink a Coke every single day because I love the taste and I'm just gonna do it. But I now have Coke minis, and I do everything possible to not drink any. I still drink alcohol, but to minimize it as much as possible. So I actually just mentally created a threshold, which is I'm just gonna only drink expensive wine, which basically means I barely drink wine. That's one, so it helps out. But it's also what are the types of foods that I want to eat? How do I want to spend my time during the day? And so I've got a tattoo that's the 86-400, which is the amount of seconds that you have in a day. And so I try to think about my own calculation, which is how do I want to spend it and what do I spend it on? So it could be family, friends, loved ones, workflow. That's one side. On the regret minimization framework, on the payward side, I don't think the calculus is ever been about, should you go public or not? I think the calculus for us has always been, what are the products and services that we want to have out there? What's the speed of growth? Do we want to control our own destiny? What's the quality of the products that we want to have out there? And at any given moment, those prioritizations keep shifting to make sure that they're aligned with, again, our values. And as long as we can continue to do what we want to do, and regardless if that's private or public, that's the route that we're going to take, because we're thinking 5, 10, 15, 20 years out. That's what we're going to do. And so the best way to minimize that regret is do we have the roadmap to be able to, frankly, have fun building those products along the way, not being beholden to, I don't want to say a corporate style attitude, but in those movies you watch where all the people in suits are coming in and people feel weird about it, or there's some sort of friction between I don't know, modern day bourgeoisie versus the common people. And I think for us, it's well, how do we stay as common and connected as a community and as a group of people creating really cool products as long as possible? I think you'll see the executives and myself stay at the company that long. And if we're forced to do anything else, I just don't think we'll be there.
Yeah.
Arjun, what do you think that you'd be doing if you weren't the co-CEO of Kraken?
I don't know. I mean, I now today don't think of anything else. So for me to even think about that is it's just not a part of my DNA. Before I was at Kraken, I was incubating, creating my own products. So I'd created a bank in Mexico, so another financial services product. I built a bunch of protocols, a reinsurance one, some that worked, some that didn't, 2 biopharma companies. I was just like tinkering around and building stuff. And now I'm doing all of that only within the Payward brand and all the products and services. So frankly, I just don't think about anything else until Jesse and Tom decide to fire me or something.
Yeah. How much do you think about competition as it pertains to what, where you should be allocating resources, decision making versus our vision, right? So for example, we look at the whole landscape of media, of different markets, of different niches. You see different trends, you see different concepts that do well, but we have our audience, we have our lane, we have our education vision, we have our mission, our principles. But the two are important for us to kind of analyze, look at, and make decisions based off of. How much of your decision making is on what the competition is pushing forward, where they're seeing success, and how much of it is just your product strategy, your vision?
I think this may not be an answer that you guys may like, but I just like thinking this way, is Peter Thiel's framework, which is competition is for losers. And I think we think that way, which is what are we trying to build? What's our unique value proposition? And then what is our 10, 20-year arc of what we're trying to build for? I think if you take a step back and build in that direction, you stop caring about the Twitter announcement that happened last week from your competition. You stop caring about the products that they build. It doesn't mean you don't pay attention. It doesn't mean that you don't admire some of the products that they build and say, should I think about adding some of these feature sets? It doesn't mean that there are some products that are commodities with each other. It just means that we're trying to build for something long-term. And building long-term means that you have to have beliefs in the products that you've already set out and how long it takes to grow. So I'll give you an example. X-Stocks. We launched it a year ago. When we made the announcement, that we were launching the product, and then we launched it, and then it got to a certain size and scale. And it has its ebbs and flows. It's on what I'd call it was on a sublinear path. It wasn't actually going in the right direction. It was just going okay. Then it got really good, and then it's back to sublinear, and then it's going really well again. So that means you have highs and lows along the way, but we know where we want it to go over the next, let's call it 5 years. Just like stable coins have taken a long time to grow, and people use stable coins as an overnight success, but like they started 8 to 10 years ago in some cases, and they had a long arc in terms of adoption. Who was going to use it? How do you get customers to adopt it? What the distribution strategy was going to look like. And so we're going through those same motions today. We have competitors in that ecosystem. So we have a top-down, we've got a bottoms-up strategy. But it doesn't mean I'm going to spend $1 billion on it, which is what I think a lot of other companies will do. They'll spend $1 billion and say, we're coming out with tokenized equities, spend a shit ton of money on it. And guess what happens in 6 months? How many of those same people have made announcements around tokenized equities? Where are they today? Nowhere. They've actually, in some cases, fired those teams or laid off those teams at like the traditional places as well as some of the exchanges. Nowhere. And what we've done is, as I mentioned before, taking a very surgical approach, which is like, okay, where do we have product market fit? Let's make the investment. Let's pull back from the areas that are not working. Again, we're not always perfect. The areas that are starting to grow again, let's put more money behind it. Let's find more partners. Permissionless token. We started payword services. We call it PWS, which is funny. It's like, it's a nomenclature on AWS. But the reason why that's important is that a certain set of our customers want forward deployment. They want handholding. They want to be able to have access to liquidity. They want other solutions and services alongside our infrastructure. Great. Well, we need to build that, and we need to think much further out on what those services can look like, rather than say, oh, it didn't work, so let me pull back. Oh, I didn't get a yield of spending $100 million of marketing and I didn't get anything back. We just don't do that. And we're never going to do that. Our whole thing is about like, what's our payback period? How do we stay profitable? How do we reinvest our profits into the areas that we want? And so that doesn't mean that we're always going to have like a certain EBITDA margin either. It just means that we're going to invest in the things we know are working, quantify it, and then put our money where our mouth is and say, hey guys, this is what's working. And then by the way, every time you look, every 6 months to a year, you're going to see this continuing to grow. By the way, now distribution engagement's gotten to a larger scale. Monetization is now to follow, and here the proof is in the pudding. That's how we want to run the company. Is we want to be able to show what is actually working. How can we quantify our engagement with our customers, and why we think it's going to have a better opportunity for our customers. They're going to be able to grow. We're not going to extract value from them, and then how we make money along the way while our customers are successful, not the other way around.
Yeah. And to your earlier point, that was the lessons that you learned along the way. Those are valuable. Even despite the capital, you reinvest and move forward accordingly. Arjun, man, thanks for keeping it real. Appreciate you taking the time.
Yeah, thanks for having me.
Yeah,
I got one last thing for you. How do you separate your self-worth from your personal perspective and your kind of life from the success of Kraken, right? Like Kraken IPOs has a meteoric run. Everything's amazing. The company's firing. Next bear market hits, it's in the gutter, morale's down. You've watched your illiquid value of the equity go from X to X divided by 50. It's just a difference. Even if that doesn't happen, if it's happened in the past, there's ups, downs. You've been through so many bear markets and bull cycles, and with your own portfolio. How do you separate your portfolio and your business success from your self-worth?
I actually think this is a pretty important question. And I think you see a lot of people fall into this trap is, you've heard this term, like, how do you live within your means? And of course, what happens is that you work your whole life. I kind of categorize people into short, medium, and long-term thinking. Short-term thinking is pretty normal. When you come out of college, I need to get a job. I want to get the salary. I want to get the bonus. And that's kind of what you think. And then the word equity, on average, people don't know what that means. Then it's like salary, bonus, and a little bit of equity. And then you start learning, oh, wow, what is this equity? Like, I can make more money with it. Then you start trying to seek that. The problem along the way is that you change your lifestyle as your balance sheet grows or how much you get paid. And then what happens is a lot of people will then start living paycheck to paycheck. You can call it keeping up with the Joneses. You want to have your kids go to the specific school. You want to get married. You want to get this ring. You want to have these experiences that you pay for. Maybe I'm just built a little bit different. Maybe I'm crazy. I don't do any of that stuff. And so my whole life, as I've accrued value and have also gone down to zero, I've stayed in the same house. I have like a very specific budget of what I spend. The things that I really care about are just my health and the food that I eat in terms of quality. And like that's my baseline. And then being able to provide at least the basic value sets or experiences that I can provide to my kids. That's kind of how I think about it. That's not very expensive, no matter where you're living in the world and what you pay for. And so when I think about that, I say, okay, great. Do I have my cushion to be able to continue that life for the rest of my life? Yes. And so if my assets or the value of my assets go up and down and oscillate, I don't care. There's probably a little bit of like care, which is like, oh, I might be able to do less things, but then that just means I'll just work harder to get back to that place. And I tell a lot of these people in 2022, my net worth was getting close to, let's call it close to $1 billion with the crypto sort of going up, or right at that peak. And then when the market was going down with crypto and the value of fintech, my firm, the assets that I had, the carrying value, what I was supposed to get, basically went down to almost like $4 million or less.
Holy shit!
And so that my total net worth had gone down to a couple $1 million. And you could say, well, that's something. It is something. I basically looked at that and said, well, look, I'm still better off than most people. I should be privileged to be in that position. So I'll just go back to working as hard as possible.
Wow, that's an incredible story.
Wow. So your baseline is just comfort, insulated lifestyle, and the rest is kind of the cherry on top.
Pretty much, yeah.
Yeah. Arjun, Sethi, thanks for your time, man.
Yeah,
appreciate you having us.
Thanks, guys.
Thanks, man.
Yeah.
Enjoy Bermuda, and have a great rest of your conference, guys. Arjun was our last guest of the day.
Indeed.
So you closed off well. Arjun, any closing thoughts here to close the day?
No, there's too many. It's up to you guys to
Yeah. Guys, that was live from the Digital Finance Forum, day one here in Bermuda. It's been great. Tomorrow we have a full slate here on the Rollup. We'll be live a little bit earlier, around 11 a.m. Eastern time. I think we've got 10, 12 guests, anything from investors, allocators, entrepreneurs, and builders. As this world of digital assets and finance converge, Rob, great session today.
Day one was a lot of fun. If it's anything, day two is gonna be great as well. So shout out to all of our guests for coming on today, and everyone for watching. Great co-hosting as always, and shout out to Bermuda for hosting a great conference.
Thanks for Bermuda, to Nir, to the production team, everyone behind the scenes. As always, we'll see you guys live from Bermuda tomorrow. Signing off.